Hi, Galen. Well, on the hour, we have about 34 participants in the room now.
Okay, well, great, thank you. So I guess we've had the closed session. I hope everyone can hear me okay. We all right, Carla? We okay to start?
Yes.
Again, I'd like to welcome everyone on this, well, for me, a bright early Tuesday morning after our holiday in the U.S. We have a great day set up for an agenda for a very important topics that we're going to be covering. Before we delve into that, I'd like to recognize some folks that are on the Zoom this morning. Of course, our IESBA Chair, Gabriela Figueroa Diaz is with us, Carolyn Lee, her Deputy Chair, Dave Sullivan from the PIOB. We have Gene Riggs, who is replacing Paul Munter as the new representative from IOSCO. I'd like to welcome Jean. She is an associate chief accountant at the U.S. SEC. We have Peter Stokov, who is replacing Inak Yazar from the OECD. And he is the Deputy Director of Internal Audit at OECD. And then finally, Sandra Peters, who is replacing Mohini Singh as the new representative from the CFA. And Sandra leads the Financial Reporting Policy Group at the CFA Institute. So those are our new CAG representatives. I'm not going to, I'll introduce the presenters in the individual sessions that start rather than doing it right now. Let's see what else we have here. I'd like to especially thank the wonderful IESBA staff for all the hard work that they've put in to put together the materials and planning for this meeting. Just as a reminder, everyone, please put your mics on mute unless you're speaking. I think we're all familiar with the protocol, raise hand, right? And when we're finished speaking, drop the hand down. I think then the first order of business is the draft minutes for the our last meeting in March. Was there any comments on those minutes, any revisions that haven't already been provided? So if you please raise your hand. And I see none. So with that then, are we ready to delve into our first session, Carla? Or we have everyone on board?
Yeah.
Okay, all right, very good. So it's we're going to get a
sorry, Galen, I see Gabriela's raised hand.
Okay, Gabriela?
Yes, hello, Galen. Thank you very much. Yeah. Good morning and good afternoon or good evening to everybody. I just wanted to congratulate Galen for having been confirmed, but above all, thank you, Galen, for your availability and for being ready and happy to join us for some more time. It's very important for us at this juncture to have you continuing in this role. You have been a very important person for the IESBA. So thank you very much and all the best for this new mandate.
Thank you so much, Gabriela. And I'd like to express my appreciation to all of the CAG representatives. You know, you're right. It is an important transition period, and I appreciate their continued support. And it'll be an interesting year for all of us. So as we move forward. Okay, then tax planning and related services. Just a tremendous opportunity to weigh in this morning. It's our first real chance to dig in. We've talked about it conceptually, but we're going to see some much greater movement. Jens Pols, the task force chair, is going to be the presenter for us, and you know, for the representatives, this is your opportunity. This is your chance to really weigh in on where IESBA is going, and they need your input, especially at this early juncture. I mean, they need it now rather than towards the end of the project. when it's much more difficult to shift direction. So Jens, if you're online, I'm going to turn the time over to you, and let's go for it.
Thank you, Galen. Can you hear me?
Yes, very well.
Okay. Perfect. Thank you. Thank you for this kind introduction. And I want to support and ask for input during that session, but also offline after this session if you are going through the papers. So thank you for having the opportunity here to present again to you. We had a quite interesting half a year in between the last CAG meeting in March and now. So please, Carla, would you go into the presentation mode, please? And then the next slide.
Yes, just give us a second, Jens.
Yeah, no problem. So I can perhaps start with some introductory remarks. What is the objective of the session? So we had in April 3 global virtual roundtables with stakeholders from all over the world, and we had the possibility to adjust the timing of those roundtables to the specific time zones. So we had a lot of participants, and we get a tremendous and good and important feedback. This I want to share with you, and I would like to communicate to you the responses of the task force, and we had shared these views during the board meeting in June. So that is the past, and now coming to the future. You know, next week we have in Nashville our next board meeting, and there we will have a first read of the new proposed sections 280. Thank you, Carla. 280 and 380. So it is not to have here a word-by-word discussion on each and every section, but I want to demonstrate to you where we have tried to take the feedback and the consideration by the board on that feedback into a real standard or drafting exercise. So on the next slide, you see the agenda. So I want to give you feedback from the global roundtables, and then I want to look at some very important items. One of the very important, and I would say we spend a lot of time during the roundtables on this specific issue, the role of a PA acting in the public interest, to try somehow to balance and explain the role of a professional accountant doing tax advisory services and tax planning and related services. Then I want to discuss with you a proposed ethical framework, and then some specific elements, and there I would like to show or cross-reference to certain sections in 280 and 380 as we will discuss it next week at board level. And another issue is to describe the gray zone without being able to have a hard definition of aggressive or improper or inappropriate, whatever you take as a terminology. And last but not least, our still quite ambitious timeline. That's the agenda of this session, and now I would like to describe to you the global roundtables. On the next slide, we had participants from more or less every jurisdictions. Please go to the next slide and the next one. Thank you. And you see here somehow from where which organizations were represented and which regions, from which region they came. And we had some keynote speakers from different jurisdictions. So the setting was, we prepared a briefing paper with 6 questions and an introductory to the item. And then we had some representatives from different organizations, also from some of you here from the CAG, to give some keynotes, some food for thought. And then we had separate sessions in smaller groups, workout sessions, and at the end we had a plenary session again where we collected the views from the rapporteurs who presented the main findings. That was a little bit the setting. And on the next slide, I would like to share with you some common themes from roundtable keynotes presentations. All of them dealt with the ethical dilemma of tax planning, that tax planning is not necessarily straightforward. So it is a little bit the balancing act to act in the client interests or the employing organizations on the one side and acting in the public interest on the other side. We heard a lot about understanding the intent of tax legislation. That is an item I will highlight also later. And then the need of getting support for PAs to navigate in an uncertainty area or area of uncertainties and complexities, and the item of multi-jurisdictional transactions and digital environment was also highlighted. Another common item was the necessity of transparency, communication, and documentation. And everyone agreed that in this area, everyone, you see here the mentioning of the policymakers, regulators, preparers, firms, professional bodies, have to play an important role in working together to promote ethical behavior in this arena. So we get, by this high-level introductory keynote speakers, very much support for the project, and then we went into some specific items. Next slide, please. And as I mentioned earlier, one of the key issues was the role of the professional accountant in acting in the public interest. Next slide, please. I'm trying to summarize 3-4 hours virtual meeting, so I'm not able to give each and every opinion a proper space here, but I try to summarize some of the key issues. So there was a general agreement across all roundtables that PAs are playing a crucial role in protecting the public interest. So, and one of the key first aspects of this public interest obligation is to provide the client or the employing organization with high quality tax planning advice. So we understood that many jurisdictions are building on the proper education, skills, and ethical behavior of the profession, because otherwise they would have to enlarge their frequency of inspections, their staff, etc. So it is in the public interest to have taxpayers who are able to fulfill their obligations with the support of the profession. And it was also the general agreement that PAs who are providing tax advice must comply with tax legislation, so the no-CLA item is also clear. Another issue was that it is important that PAs have a wider perspective to guide the client or the employing organization in understanding the tax laws, the regulations, and how to cooperate and to act in a proper way with tax authorities in different jurisdictions. But what are the challenges? And we had representatives, for example, also from the International Bar Association and other tax advisory organizations, I will call it, non-PAs, but doing tax advice. And there we discussed what is now what is captured under the notion of public interest. So it is not the task of a PA to fulfill fully the expectation of the tax authorities, but there is a balancing act how to enlarge also the advice. For example, in a region where you have public opinion on certain issues, that you include these reputational issues in an advice. But what is in the public interest is not always what is the popular opinion and perception of media, etc. So how to implement these stakeholder perspective. And then it was made very clear that tax positions and policies are quite changing, frequently changing. So if there's a political change in a particular jurisdiction, long-standing rules and regulation may shift and may change. Next slide, please. So we had distilled some of these inputs, and first point, which is very important, and I think it's something which we have also now seen frequently repeated by others in studies and just newly published exercises, for example, by the European Parliament, that the professional accountant are expected to exercise the professional judgment. So this is very important, the professional judgment in carrying out tax planning services. We also have proposed to the board not to try to describe or even define the public interest in abstract, but instead we trying to give some acknowledgement in the code that a large part of what acting in the public interest means is to assist and navigate, support, guide your employing organization or your clients in complying with tax laws and regulation. And we want also to highlight that in doing so, it is important to recognize that employing organizations and clients share responsibility to society to pay their legally assessed tax dues. So this is something which is a role of the profession. We also want to address the reputational risks to clients and employing organizations on the one hand, but also the reputational damage which can also come from far-reaching consequences to them or to their stakeholders. And I want to demonstrate this or cross-reference this on the next slide in just showing to you how we are trying to formulate and to draft. And I'm going now to section 280, which is the section for professional accountant and business. And we have very similar situation-specific proposals in 380 for the public accountant in public practice. So I don't want to go into the nuances of the differences, but just to demonstrate how we try to address this. So in the general part, we're trying to describe the professional accountant's public interest role. So we are starting in describing the important role in tax planning by contributing knowledge, skills, experience to assist, in this case, the employing organization to meet the tax planning goals while complying with tax laws and regulations. And we also cross-reference to the important role of facilitating a more efficient and effective operation of a jurisdiction's tax system. And this together is in the public interest. So that's the starting point. And then we are also saying it's a right, and employing organization is entitled to organize their tax affairs for tax planning purposes. So this is in principle nothing negative, but while doing so, employing organization have this responsibility. So we repeat, to pay taxes as determined by the relevant tax laws and regulations. By that, we want to demonstrate that the relevant tax laws and regulations might be more than one. And the PA has the responsibility to advise how to meet these tax planning objectives in the best way. But, and that's the other balancing act, equally, accountants have a responsibility to assist employing organization in meeting their responsibility to pay taxes and not seek to avoid it through tax evasion. So that's the one, or by taking advantage of tax minimization arrangement that, although not prohibited by tax laws and regulations, might still create threat to compliance with the fundamental principles. By that, we want to demonstrate that the one issue is to say it's legal, that's perfectly legal, but we want to address a thought process here, and by that we are addressing the fundamental principles and the conceptual framework, threats, safeguards, in addressing the gray zone. And I think I would like to stop perhaps here. Next slide, please. And I would be very happy for a first reaction to this conceptual approach to the matter of the public interest. I see, Paul, you have raised your hand.
Yes, just a brief comment. Philosophically and morally, I'm completely behind the direction you're heading. I think this makes a lot of sense. My only skepticism is, it kind of requires two sides, and I wonder whether companies will accept the advice of, the tax planning professionals here who say, well, this is technically legal, but it's not right. And again, it's more not a question you can answer, but I kind of wish what you're proposing could be imposed upon companies as well. Thank you.
Thank you. Natasha?
Yes, hi. Thank you very much for that. I guess, as ever, I'm going to be a little bit blunt here. I mean, I think that there's a very clear conflict of interest here. I would like to see you using that word. I feel like we're sort of tiptoeing around the kind of really profound public interest issue, which is there's a conflict, and that conflict is certainly not in the public interest. And whilst there are no doubt lots of benefits to the corporates of having the accountants support tax planning activities, I personally find it very difficult to see why it must be the accountant or the auditor. I think it's actually really, really important that it's not, to ensure that we continue to underpin that objectivity and independence that is so absolutely vital for audit. So I think you talked about the grey zone. I mean, that's exactly it. There's a very, very large grey zone, grey area. I think there's lots of activities that are potentially crossing the line, and we've seen investigations and judgments which show that that is the case. There's quite a lot of evidence sort of academic evidence to show that tax payments are not aligned with economic activity in the way that should be expected or would be expected given the intent of tax law. So, you know, there's a letter of the law and then there's the spirit of the law, and then there's the implications for the independence and objectivity of the auditor. And I don't see why the public interest should be compromised in any way on this. There are plenty of very smart people that can provide tax advice who are not the auditors. Thank you.
Just very briefly to that there is no misunderstanding. We are not talking about the auditor. The auditor is not allowed to do tax planning services in this area. That's a new section in the code, in the independent section from the 15th of December. So that's not our scope. We are talking about accountants not being the auditor, just for clarification.
Jens, if I can chime in here, I am so sorry I lost my internet connection. And
sorry, I didn't want to take over.
Yeah, well, that's fine. I see Natasha's just weighed in, and Kito Ishwata, I see your hand raised.
Thank you. Thank you very much, James, for your presentation. I'd like to share one point. It may be not just a point about public interest, but this development of code in general. I understand that some jurisdictions are enriching the disclosure of corporate code of conduct for responsible taxation. So it may be useful to refer them in developing this code. That's my comment. Thank you.
Jen, you've got why don't you just go ahead with the questions, okay?
Yes, sure. Hussein?
More raise hand. Yep.
Thank you. My concern is about whether there's a conflict between public interest and client interest. We observe that for tax planning, client interest as client pay for it, for accountant come first. Therefore, you should set up a clear balance between public interest and client interest. I think public interest should come first, and also it's important. This tax planning should be comply with tax regulation, not to force tax regulation by interpreting in different manner and looking for gap and getting benefit from these type of benefit gap. Therefore, it should be clear that if tax regulation allow client to make tax planning, offer tax planning opportunities, professional accountant should advise on these type of issues. Thank you.
Thank you. Perhaps I can respond to the first 3 or 4, and then Paul, you will continue. Just very briefly. Paul, thank you for your input. I think we are coming to the situation in a later part of that sections we'll look at, where we are discussing the conflict if your client or the employing organization is not doing that what you are advising, whether you are able to continue and what issues you can do then. But I think it's very important. We can only start with a professional accountant, but there's another part of the game where the companies or corporations are. And Natasha, I see what you're saying with a conflict of interest, and I just want to repeat that we see this specific situation where the auditor is involved, so that we had a change in a fast track, so to say, together with the non-assurance services task force, and there we try to fix the conflict of interest of tax planning and the audit role. But we are here in the professional accountant role where no audit services are provided, but even there, there's a conflict, and we're trying to balance and describe this. And it's a different situation, I would say, and that was a feedback we received also from the round tables, and that is, if the service of the auditor is clearly in the interest of the client, of the public, and everyone, it's the same direction to have proper assurance on the financial and in the future non-financial reporting. Doing tax planning advice, we have to have a broader perspective, because there is the conflicting interest of someone who only want to pay the taxes which are necessary, and on the other side, the tax authorities who want to have a higher amount, just being very, very blunt and oversimplifying it. And we tried to address this, that both sides have the interest of trusting to the other side, because otherwise this tax system would collapse. And we are trying to describe this situation, and having proper tax advice is in the public interest itself. And I think that is very important to explain.
Hey, Jens, can I interject here for a second? It doesn't come across to me that the auditor would be precluded from providing tax services, at least not from the slides in prior discussion. Maybe you could clarify, are we talking about the audit team or the entire audit firm? And how wouldn't that have a significant impact on smaller firms that are expected to assist their clients both in the tax area as well as audit? This is new to me.
No, we have the section 640 in the non-assurance services, where we have the tax planning in the PI environment. I need your support, Carla. Perhaps you can, in the meantime, look at the exact notion of the section which is part of the non-assurance services, not proposals. We have agreed them last December, that tax planning services where there is not the likelihood I have not the exact wording, is sure, it's confident that this opinion will likely to prevail. I think that is the notion we address. So there we have in 640, is it, Carla?
It's section 604, Jens.
604. Sorry, thank you.
Yeah, it is the revised non-assurance services provisions do deal with a number of prohibitions relative to the tax planning services. In particular, any tax planning services that might create a self-review threat, these are prohibited straight away. And there is a specific prohibition relative to the to a tax planning advice that depends on the accounting treatment in the financial statements as a very specific prohibition. And yes, as Jens says, also any tax advice that doesn't have a basis that's likely to prevail in court also would not be permissible. So there are a number of prohibitions already in the area of tax planning for auditors.
Yes, and thank you. And that's why I'm saying we are looking at the other situation where this specific situation is not the case. So I think the next, thank you, Akihito, for this cross-reference to disclosures and responsible taxation. We are coming to that in a later stage of our draft, where we are talking about disclosures and the sustainability issues, which are factors we want to consider. And Hussein, thank you also for your analysis of the gap between public interest and client interest, but we're trying by the section I mentioned to balance this. So acting in the client interest is also a part of acting in the public interest. So it is two sides of a coin, I would say. So Paul, now to you, Paul Thompson.
Thanks. Thank you very much, Jens. Actually, if I understood him correctly, my point kind of relates to what Akihito said, where I think there was some reference to jurisdictional or regional code of conduct in the area of tax planning or tax evasion, whatever you want to call it. And with that in mind, I just wanted to draw the task force attention, if it wasn't be aware of an important initiative in the European Union. The European Commission.
Paul, I'm having a real tough time hearing you. I don't know if others are or not.
Yeah, you're coming in and out, Paul, so it's very choppy.
Okay, let me just make some. I've got a feeling that I've got a problem with the microphone.
Yeah, that's better now. It's better.
Is it? Okay.
Much better.
Yeah, I seem to have a problem with the microphone. So just to be a little bit to reiterate the point. So yeah, the European Commission is presently surveying, conducting a short survey on tax evasion and aggressive tax planning in the European Union, specifically addressing the role of enablers. And of course, accountants potentially find themselves thrown into this bucket of being called enablers. This particular project, as far as I can tell, and I've only had a quick read through of it, it's referred to by its acronym SAFE, S-A-F-E, and they seem to be considering an option. And the option is a code of conduct for all enablers. This option would involve the requirement for all enablers to follow a code of conduct that obliges enablers to ensure they do not facilitate tax evasion or aggressive tax planning. So I'm just really drawing your attention if the task force is not already aware of that, because it's always nice to be aware of important regional developments. Thanks, Jens.
Thank you. I see Ms. Manabat.
Thank you. First, let me say that your team had a very challenging role to play to sort of come up with the report, the consultations, and everything. But I would just like to highlight some points. One, it is really very difficult to balance clients' interest and public interest because they are not necessarily congruent. Okay, and it would be tough to measure the thresholds. So I don't know, the motivations are different. The other aspect is there is no limit to the creativity of the tax advisor, especially the professional accountant who is very aware or familiar with business transactions and probably has access to the records of the company and would know how to structure them. So it's not a simple case of structuring or planning for an efficient tax operational aspect of the company. To me, it is almost, I would say, it is improbable to really say that public interest is served and client's interest is also equally served. Just an observation. Thank you.
Thank you. Dawn?
Thank you, Jens. We certainly appreciate the need to serve the public interest, and it looks like what you've developed here in the application guidance as proposed, it's suitable, seems to make a lot of sense. I think the concern from our perspective is whether or not there will be a widened expectation gap. We wouldn't want to see that we become part of policing the system or part of, the other side, that we're not in a position to serve the client interest, because that also serves the public interest. Then I just want to repeat our earlier concerns about the jurisdictional adoptability of whatever we do propose. And so where we can go with guidance material or application guidance, that will certainly make adoption a lot easier across the board. And to Paul's point, that we watch the EU project so that we can coordinate. And again, that's just all about the ability to adopt.
Thank you, Dawn. Hilde.
Thank you, Jens, and good afternoon to all. I think I would like to start from a little bit of a broader perspective. And I think I would like to congratulate the task force and yourself, Jens, on getting this far, because we had a lot of discussion already on this, and this is the first time we can look at what is basically the output that would come of all those discussions. And I think it's a very good starting point, and I can very well see that, for a global code like the IESBA code, to get to something which should fit throughout all jurisdictions in the world, it's not easy to find a common ground and to find a balanced proposal. So I think you did quite a good job. Honestly, if we look at this and we look at, it has been referred to already, to what we have as directives, requirements, regulations in the European Union, what we have in law and regulation is going further than what you have here. But, we have to recognize this is supposedly also for countries where they have nothing like that at all. So it would be a big leap for them. So that's your balancing exercise. And when we look at those paragraphs, that tax planning should recognize the public interest. Of course, it is going without saying. How to address certain of the concerns is maybe not specifically related to what is in these paragraphs, but it is potentially looking further what is in the proposals as to, are there some matters there that should be, instead of application material, maybe they should be requirements. Should there be some more bolder prohibitions there? I think that is potentially the discussion that we should have. How do we respond to those concerns? You responded to that, I would say, confusion, Jens, as to this is also for auditors. I think maybe the fact that this is coming up is something that might need some clarification. I think it is clear if you see this in how the code is structured, which is not straightforward, it's quite complicated, but it made me think that because this came back from a few people, maybe that needs a little bit of clarification. So a number of things definitely for you to consider here. Thank you.
Thank you very much for your comments. So Paul, yes, and Hilde, we are very closely observing and communicating with the European Commission what they are preparing. But as Hilde said correctly, it's a regional initiative, and we have to look at the global level. But reading carefully the quite, how to say, mixed questions or mixing questions, evasion, aggressive, enabler, all these terms which are undefined, and the proposals to look at certain to look at how to say, I think it's important that they're proposing as one solution having a global code as IESBA Code of Ethics. So I think the communication with them has demonstrated that there is a need perhaps of something in common. And having also read a study which was published by the subcommittee of the European Parliament, FISC, just at the beginning of August, also they are referencing because of the diversity inside Europe, regulated profession, unregulated profession. They have a code of conduct for tax services. They have not a code of conduct. I think they looked at 5 jurisdictions inside Europe and have a diversity, huge diversity. Even more, having a global best practice, I think, is something. My impression is also Europe will consider, but we will see how that development is continuing. So thank you for your input on that. Yes, I think it is a challenge to balance, and that's, I think, the professional judgment in each and every case which is needed. And we don't want to make a cookbook to say if that you are there and if that situation you are in another situation, but we want to describe that there is this conflict or this tension between, but it's part of the professional judgment in giving advice. It's not that we are limiting our thinking to professional accountant, and it's perhaps an issue, Natasha, you have raised. We are here in the code of ethics for professional accountants, but tax planning, very similarly to the sustainability project, is something where also non-professionals or non-PAs, to say, are involved. So that's why we had outreach activities with lawyers and unregulated professionals. And we are trying to be not only jurisdiction neutral, but also conceptually neutral, to say it could also be applicable by someone who is not a professional accountant and formally bound to this regulation. But it is a broader discussion we have to see, because in some jurisdictions and even in the European Union, we have countries where you have a very closely regulated profession, and you have even countries where you have no regulation for tax advising professionals. So, thank you, Dawn, for your input and support. And we see your concern, the problem of policing the system, and that is another challenge, that we are not the enforcement authority, and I think that is something we want to understand better, the jurisdictional adaptability, how to adapt it best and how it is possible to implement. I think that is a discussion we will continue. And Hilda, I see that European Parliament and probable European Commission is going even further in some aspects, and we are very interested in the discussion, and we will see how the board will react next week, where there is a tendency to say to heighten the authority of application material into requirements. So I think that is something we will take on board, and I think it's in the communication. Thank you again for this demand for clarification that we are not talking about the auditor doing tax planning services. That is something we will probably have to address more clearly in our communication. Thank you. Galen, if you allow, I would continue.
Let's keep going then. Yeah.
Yeah.
Thank you, Jens.
Thank you. The next slide is a proposed ethical framework, which we presented on the next slide to the board in June and get support in June. And I just want to show to you now here the proposed ethical framework and then go into detail, because this was a guidance for the task force in drafting then the specific elements. Next slide, please. So first, what is part of the framework is to comply with the fundamental principles, and we want to highlight the types of threats. So we want to see that the sections we are drafting or have drafted are consistent with the other parts and the overarching fundamental principles and the conceptual framework of the code. And we want to exhibit the mindset that and the behavior expected, and we are following here the role and mindset provisions of the code. I think that is very important also to highlight this environment in which the professional accountant doing tax advice is acting. Then we have the notion of review. So it's about applicable tax laws and regulations, and we want to highlight the importance of searching and looking for the legislative intent. And I think that was something, Natasha, you mentioned also, behind the relevant laws and regulation, the spirit of the law and the economic purpose and substance of the transaction. And you will see this later when we are coming to some specific items. Then very, very important it is to have the notion of that the professionals should exercise their professional judgment and to establish a credible basis for the tax planning advice in circumstances of uncertainty. We looked for the best terminology. Perhaps this credible basis is something, but I will come to this later. We discussed this also on board level, how we should describe this threshold. Then the consultation, getting advice internally, externally, with qualified experts or by qualified experts, which might be part of specific actions to respond to specific threats. Then the communication issue to those charged with government and management or the individual client. And we are mentioning and want to mention the escalation process within the organization or with the client. And then the transparency issue, which is in many situations a good safeguard or action to reduce the threat to an acceptable level. But we have also to see the PA's duty of confidentiality. So it's very jurisdictional specific whether there is a possibility to disclose, to get transparency in that context. And two last principles, perhaps, the documentation need, the internal documentation to document the substance of the judgment and decisions and actions, and making clear that no CLAR is very important and that stepping over the line is not acceptable. And we want also to look at the consequences of breaches. So I think being clear, no CLAR is also relevant in this context. On the next slides, I want to go to some specific elements. And the first one on the next slide is the intent of legislation. I think there was general agreement across all round tables that understanding the legislator's intent is an essential part of applying the tax legislation. We have seen that the interpretation rules in different jurisdictions are different, and we are not saying these or another kind of interpretation rules are globally accepted, but to understand the history of the legislation and the communicated intent of a legislative act is important. And so that's why PAs should gather all relevant facts and circumstances, especially in determining if a tax transaction would stand scrutiny in a court of law. And PAs should not succumb to pressure from the employing organization or client to adopt a particular tax strategy. We want to highlight or should highlight, that was an outcome from the roundtable, to look at specific tools in certain jurisdictions to have pre-approval, communication, consultation possibilities, formally, informally, with tax authorities. And then another notion we have heard very often: PAs should not be involved in transactions that are or would be perceived as artificial or contrived. So the challenges we heard and we know are the complexities in cross-border transaction involving different public interest considerations, different interpretation of laws, different cultures, different tax authority communication possibilities. And we have also to see that courts may change the law, and it should be possible that the professional accountant is challenging an extant interpretation of the law by the tax authorities without being seen as unethical. So that is something we want or should consider. That was an output from the round tables discussions. On the next slide.
Jens, if I might interject,
yes.
we've got about 25 minutes, a little bit less than 25 minutes to go, and I noticed that you're only about halfway through your slides. So I know you're going to want to get into some of the specific wording that suggested language.
Okay,
so I'm just putting that as a heads up here.
Okay, I will be quick. So coming to the next slide, please. We are saying the intent is a factor, which is important. The responsibility is also to the professional accountant to have a proper professional competence. So there must be appropriate expertise. And we have also highlighted the inquiring mind and the notion of credible basis. So one issue perhaps on the next slide is an issue of establishing, sorry, am I here right? Next slide, yes, is about the credible basis or the likely to prevail. So we discussed very intensively during the roundtables these issues. Some of the participants said the threshold was 50% or less than 50%. But then we understood that we couldn't have a simple threshold, because in many jurisdictions, even lower thresholds, 20%, 10%, 25% are mentioned if in combination there is transparency, disclosure of a certain tax issue. So we will not give in our proposal any threshold. So on the next slide, we discussed the likelihood to prevail as a possible threshold, but then we are too close to a numerical probabilistic measurement. And I think one of you have mentioned it earlier. It's very difficult to measure this. So that's why we took on board a notion that a PA should not advise client employing organization if they believe it's unlikely that the tax treatment will prevail, or another notion, the PA has not been able to establish a credible basis for his tax position. And we want to give some guidance material to that, and important considerations are due diligence, appropriate due diligence, transparency to the tax authority, documentation, and questions on the continuing of the relationship. I'm coming now very quickly to the proposed text, that we have possibilities to get some feedback from you. And you see here a requirement in 280.12. If a professional accountant is involved in advising on or recommending a tax planning arrangement for an employing organization, the accountant should only do so if the accountant has established a credible basis in laws and regulations for the arrangement. And then if the tax planning arrangement does not have a credible basis, paragraph R to 8012 is not preclude the professional accountant from explaining to the accountant's immediate superior or other responsible individual within the employing organization the accountant's rationale. There we want to make clear that talking about his judgment is something which is allowed. So on that slide, we have summarized 280.12a2 to describe factors which might be relevant for establishing a credible basis. And we are saying this may vary from jurisdiction to jurisdiction. And we are describing here actions that a professional might take to establish a credible basis. And that is very jurisdictional specific. It's not an and 1, 2, 3. These are factors, possible factors. In one jurisdiction, it might be the third bullet point, which is very important, in another one, but these are possible factors. You have had perhaps the possibility to read the text, but just very briefly, it's about the relevant facts and circumstances, including economic purpose and substance of an arrangement, the reasonableness of assumptions, the relevant tax legislation, the intent of the relevant tax legislation, looking at literature, court decision, other authoritative material, I would say. Is it a common practice? Has it been challenged by tax authorities? How likely the proposed arrangement would be accepted by the relevant tax authorities if all the relevant facts and circumstances are disclosed? And then the consultation with the experts or tax authorities as possible actions we are proposing here. So I will stop here and would be very happy to get some feedback from you on that part, which is on that issue of credible basis. Thank you.
Jens, I see Wei Ming has her hand raised.
Thank you.
Thanks, Chairman. Hello, everyone. I appreciate the work has been done. The task force proposed that to review the economic purpose and substance of the transaction or arrangement is a key element of the ethical framework. I noticed the task force proposed to use a neutral term tax efficiency when considering the description of tax planning. I support this general approach. I would like to suggest to reflect or capture this key element in the description of tax planning to scope out those tax efficiency planning arrangements which are artificial or contrived. That's all. Thank you.
Thank you. Hussein?
Thank you. My point is about intent of tax legislation. This concept, I think, is too subjective. Professional accountant sometimes interpret this intention, this intent of legislation differently. Therefore, we face with different tax planning practices. As I know, rule and regulation generally have objectives or goals, and it's written in that document of rules and regulation. Therefore, this concept, intent of tax regulation, it's useful to reconsider this concept. This intent, I'm not an English language expert, but intent belongs to human beings, and sometimes it's not directly, direct issues. That's all. Thank you.
Thank you. I see no other hand, so I could respond Thank you, Wei Meng, for your support, and also we will reflect on the proposals you made on tax efficiency and scoping of that. Hussein, the intent of tax legislation, I understand it's subjective. Yes, we are looking here that in some jurisdictions, not in every jurisdiction, we have protocols of the procedures, official journals, where there is, so to say, application material where it's said, we are doing this legislation because we want to close this hole or loophole. We want to establish that and that practice. And I think that is important to understand, because you have to inform your client on that this is an intent. And we had just cases in my jurisdictions where, in this case, lawyers have tried to circumvent the clearly mentioned intent of the court. And in the end of the legislator, the courts have decided exactly how the intent was written in the official documents accompanying a legislative act. But this is, again, a factor which might be relevant in jurisdiction A, but in a jurisdiction B, where this type of transparency of intent is not visible, it might be different. But we want to make clear, especially in a cross-border situation, to be aware of different interpretation rules and sources and materials you have to consider on understanding what a specific regulation in laws and regulation want to achieve. Natasha.
Thank you. And also thank you very much earlier for the clarification. I mean, I certainly think it should be bold up front that we are talking here about accountants who are not auditors or in any way associated with the auditors, as Galen mentioned, not in the same firm, for example. I think from the perspective that you're taking, that the code is you've got the right elements there. But I would go back to my original point, which is that in the end, the accountants are working for their client first and foremost. And I agree with a comment made earlier that I see it as very improbable, I think was the word, and I thought that was a very good one, that you're going to have that aligned, perfectly with the public interest. So I think transparency here is absolutely vital. The only other observation I was going to make is, of course, the auditor should be checking that the tax arrangements are not themselves causing a kind of a potential material issue for the financial statements as part of the whole internal control side. So, I mean, I would be looking first and foremost to them to be flagging aggressive tax treatment that could then be leading to other concerns. So, it may be circular in the end, but I guess we're talking about different people.
Thank you. Yasmin?
Thank you. I appreciate the work done by the task force today. So we find the listing of the factors and examples included in 280.12A2 to establish a credible basis to be very helpful, and appreciate the principles-based approach that was taken here. We believe the examples provide the flexibility needed to apply these parameters across various jurisdictions. Thank you.
Yeah,
thank you very much.
I'd like to weigh in as well on this particular slide. I'm still sort of mulling over the credible basis terminology. I think you're still dealing with probability and unlikelihood or likelihood. It may be what we end up with. I think it's a good start, and maybe we can stick with it. I'm looking at the phrase in the opening part of this language, and it talks about the PA might take the actions the PA might take to establish a credible basis. I'm not sure it seems to me that the employer, in the case of the client, it's up to them to establish the credible basis, not the PA, and that the PA should be concluding that the employer's evaluation of credibility is reasonable. And if they can't conclude the reasonableness, then maybe there should be a requirement to preclude them from advising the employer or the client to pursue a particular tax strategy. So it's just a little bit of nuance, but again, I don't think it's up to, I think it's up to the tax-paying entity to establish credibility, not the advisor.
Thank you. Yes, very, very briefly, Natasha, thank you for this notion also of the auditor. What is the scope of his work when he is confronted with aggressive tax structures? I think that is something which is the scope of the audit, which is more a responsibility for the IASB in that respect. But I think that's an interesting point where we have a link we will consider. And thank you, Jasmine, for your evaluation and support. And Galen, I think that's an interesting point. Perhaps we have different situations we are considering, and we have to think about in which role the professional accountant is acting. Sometimes, perhaps in smaller client relationships or entities or employing organizations, it's up to the PA to do that, because there is only a broad requirement by the client to say, I want to have an efficient tax strategy, make it, and they will take it. And we have more sophisticated organizations where you have a tax department, where you have tax strategies, where you have disclosures, and there you are more in an assessment role or in a I wouldn't say assurance role, but something like this, to give an own opinion on a certain structure, which is more or less in the strategy of the company. I think we have to think about both situations, and we will see how to manage that. Thank you for that input. May I continue? Going to the next two items. First, we have discussed about a stand back test, how to react to the heightened public attention on the issue of tax avoidance. We are considering that the reputational role and the role of the profession in this context is another issue we want to address. And so we are proposing that the reputational, commercial, and wider economic risk and consequences should be considered from the way stakeholders might view the arrangement before proceeding with the advice. So that there is we call it stand-back test, that we have this wider perspective as part of a specific advice. And this is also consistent with the Role and Mindset project. And just as a demonstration, I would like to cross-reference to R 280.13 on the next slide, where we're saying, in determining whether to proceed with a tax advice or recommendation on the tax planning arrangement, the professional accountant shall consider the reputational, commercial, and wider economical risk and consequences arising from the way stakeholders might view the arrangement. And we are then in application material A1, A2, describing this a little bit more in detail. And perhaps that we have enough time to discuss also the next point. I will skip to the gray zone now, the broad spectrum of tax planning, and coming to the terminology issue, which we have on the next slide. Even going further, yes, and next slide. We have seen that we were challenged by many on terminology, and the suggestion by the round table was to have, for example, the term reasonable instead of appropriate or proper, and to focus on good practical guidance. And we have then proposed a text on slide 29 on the circumstances of uncertainty, because that is the gray zone. So we want to delineate the gray zone by providing guidance on relevant considerations of economic substance and commercial purposes. And I just want to highlight this section before coming to a final feedback round. Next slide, please. It is 280.15a2 on the next slide. And we are describing their circumstances that might give rise to uncertainty, include having no factual basis, lack of clarity in laws and regulations, and giving examples, lack of clarity regarding the economic purpose, and lack of clarity about the ultimate beneficiary of tax planning arrangement. Also, this type of factors we want to include. So I was now very quickly to get also feedback on these two issues on uncertainty and the previous one on the stand back test or stand back obligation. And hopefully we will get some feedback or ideas, concerns from your side. Sorry for being so in a hurry.
Yeah, and just a quick question. So these proposed languages in 280, would there be a corresponding 380 section, or what? Why? Yeah. Okay. Good.
Yeah. And just for demonstration purposes, I just took the PA in business, and if you're reading the referred papers, we have made a reference to the board papers for next week. There you can read the issue paper, and both they are very aligned. We try to, and perhaps we will get some feedback for further consideration during the board session.
Folks, this is your chance. I mean, it seems to me like this list is a pretty good one, Jens, but there might be some duplication in here, some refining of the word. It seemed like I'm looking at one of the bullets and it talks about complexity, and doesn't the fundamental principles requiring a PA to be competent, isn't that already covered? So there's questions like that sort of popped into my head. But I see Akito has his hand raised. Akito?
Thank you, Galen. Thank you very much, Jens, for your explanation. I have one comment regarding gray zone. I think that the proposed example of circumstances of uncertainty is very helpful. For more enhancement, my suggestion is that to add examples in circumstances of uncertainty in relation to the situation of entity which make transactions regarding tax planning. For example, whether the stance of the entity is coherent, whether related parties are involved, whether the required relevant documentations are properly in place. I think that to add this point may make the examples more useful. That's all. Thank you.
Thank you very much for this. And I think I have 1 minute left to be in time. Correct?
We're not going to just turn off the speakers here. So you go ahead.
To the timeline.
I don't see other hands raised, though.
Okay. Thank you, Galen. And on the next slide, we have the final slide. You see where we are. We are now in September 2022, and from where we are coming. So we are still in line with our time planning timeline. So we will have a first read of proposals, and we will have certainly a very intensive discussion, because as you have seen now for the first time some drafting, the board will see for the first time a draft document, which clearly will not be the final. So there will be many tweaks and discussions and exercises we will do, but it's a first try. And depending on the feedback we will get from the board, we are still quite confident or hopeful that we will be able to have a exposure draft in December, which the board is able to approve. And then you see the next steps would be, if we get the responses from the ED in the September board meeting, to have a final decision next December in 2023 for a final approval of a final document. So that's our ambition. Thank you.
Well, thank you, Jens. And you finished right on time. You're 1 minute late here. Oh, well. That brings us to a break at this point, and we'll have that'll be a 15-minute break, and then we'll reconvene. Thank you again, Jens.
Thank you to all of you.
Galen, we're 5 minutes to 10. I think we're good to kick off the next section now.
Okay, and so that session will be presented by Carolyn Lee, our Deputy Chair of the IESBA, and it'll be an update on the engagement team and group audits independence. So Carolyn, the floor is yours.
Thanks, Galen. Good morning, good afternoon, good evening, everyone. Thanks, Dinah. So this session, I'll walk you through some of the responses that came back from the engagement team group audit exposure draft, and the proposals that the task force is putting forward to the IESBA in our meeting in September, which is next week. So going on to the next slide, Dinah. So for this session, I hope to receive responses from you to comments that we got on our exposure draft. So appreciate your inputs, and look forward to hearing any comments that you have. We're not going to cover all the responses that came back, but more the significant comments and more significant or substantive revisions that are being proposed. And the last would be to provide the next steps in our project as we hope to finalize it in the December IESBA meeting. So on the next slide, the last time you actually received the presentation on engagement team group audit was a year ago in September 21, and Sylvie presented to you ahead of when we issued that exposure draft. In March of this year, there was a report back on the comments. The exposure draft was released in February of 2022, and 31st May was the deadline for comments, and we received 49 responses, including 2 monitoring group members, IFIA and IOSCO. And the majority of the comments actually came from PAOs, and as well as 2 independent national standard setters firms of the 11 firms that responded, 8 were members of the Forum of Firms. We also had the GAO providing their response. And just highlighting what was in the exposure draft. Firstly, it was aligning the definition of engagement team in the code with the definition of the same in ISA 200 revised and the ISQM 1 standard, changing the definitions of audit team, review team, assurance team to recognize that engagement quality reviewers may be sourced from outside the firm or network firm, enhancing provisions regarding independence considerations in a group audit context, and providing guidance to deal with when an entity becomes an audit client during or after the period covered by the group financial statements on which the group auditor firm will be expressing an opinion. And last but not least, enhancing guidance on a process to address a breach at the component auditor firm level. So with that, let me then go into the next slide, which goes on to what we've done since the release of the ED. So as I mentioned, in March of this year, we had a report back to the CAG on the September discussion. We also reviewed and presented back to the board a high-level overview of certain conceptual early comments that we received in our July meeting. And subsequently, the task force has met both virtually as well as in person to undertake a full analysis of comments and develop the proposed changes to the exposure draft that we're covering today, as well as in our September board meeting. At the end of August, the task force had a discussion with the IESB, their ISA 600 task force reps on coordination matters. So coordination between the two boards continues in this respect. Now, going into the first bit of the substantive comments around definitions. And so on the next slide, the proposed definitions that we cover relate to engagement team, audit team, as well as some of the new definitions that we introduced as a result of the group audit section. So there's general support for aligning the engagement team definition to that in ISA 220 and ISQM 1. And this was also highlighted to the board in our meeting in June. Then there were requests for for visual illustration of the definitions, given that there were so many definitions, and sometimes the definitions were, given that the definitions were connected to each other, some felt that the definitions were overly complex. So as a result, we have put together a visualization of the definition, and I'll walk you through that visualization. We also had questions about the component audit client definition. That definition was also seen to be complex. So we have reworded the component audit client definition to make it clearer, and we propose that a staff FAQ be put out in order to help with the understanding of the definition. This is, I guess, in view of the fact that in ISA 600 revised, a component could be an entity, but it could also be a business function or activity. So as a result, we think there is a need to maybe put out some additional non-authoritative material in the form of an FAQ. Coming back to the engagement team definition, the definitions refer to, in the engagement team definition, it refers to audit procedures, whereas the definitions in section 405 deals with audit work. So there's a question about, whether why is it that audit work is used and as opposed to audit procedures, and when would it be appropriate? So we did have a discussion with the IWSB rep on 29th of August regarding this, and they reaffirmed our understanding that when there's reference to audit work, it refers more broadly to the entirety of the work effort. And it includes planning, supervision, and that planning also includes planning of the components that are to be covered as part of the group audit. In the case of audit procedures, it refers specifically to the nature, timing, and extent of procedures carried out in order to gather audit evidence. So the IWSB rep referred us to their issues paper in their September 2021 meeting that dealt with this. But they did acknowledge that there were differences within the body of ICES itself. And so whenever there's a reference to another international standard on auditing, they would then use the terminology that is in that standard, even though for ISO 600 revised purposes, the application is that audit work refers more broadly to the entire work effort, and audit procedures refers specifically to the work that's carried out. And so the engagement team group audit task force has agreed that we will revisit the usage of audit work in the draft text that we had circulated before this meeting that we had with the ISO 600 revised task force. So going on to the next slide, we also had comments around service providers, and there were questions about whether would the independence requirements apply to the individuals who were involved in carrying out audit procedures from service provider organizations, or would it cover their organizations as well? Meaning, would their organizations need to be independent as well? And there were also comments about providing examples of service providers and definition of service providers. So the extant code already scopes in individual service providers who perform audit procedures, and it makes it clear that whilst it covers individuals, it does not cover or extend to their organizations, given that their organizations are not likely to be able to influence the outcome of the audit. So, so we have clarified, or we aim to clarify that we are really referring to individuals and not the organizations. Examples of service providers are set out in ISQM 1, and as a result, we don't think that it's necessary to basically replicate that in the code. Also, ISQM 1 has a clear definition of service providers, and we didn't think that it was necessary to have that definition set out in the code as well. So that's the task force response on service providers. In respect of experts, so there's always been discussions around experts, and in the definition of engagement team, it has clarified, we've clarified that external experts, which are essentially the auditor's experts, their work is actually the responsibility of the auditor. So the auditor has to assess the work of external experts. And as a result, the judgment and decision is made by the auditor and not the external expert. So the ability of the external expert to influence the outcome of the audit is limited to a certain extent. But IESBA has recognized that there is a need to consider the independence of external experts. And in the strategy survey that we've put out, we have indicated that we're looking at a potential future project on the independence of external experts. And also in terms of external experts, there's been comments around sustainability related services and the use of external experts in those scenarios, those assurance engagements. And so IESBA is also looking at responding to developments on sustainability reporting and sustainability assurance of sustainability information. So those dealing with that would be outside of the scope of the engagement team group audit project. So going on to the definition, and maybe just sharing with you on the next slide, the visualization. So if we start with the engagement team definition, which is the blue box, you'll see that, thanks Dinah, you'll see that it includes partners and staff performing the engagement. And in square brackets, I've added in audit work on the engagement. So essentially when we talk about performing the engagement, we're talking about performing the audit work, which is the broader terminology. And in addition, it also includes other individuals who perform procedures on the engagement. So those procedures in the case of an audit would be audit procedures. In our definition of engagement team, because it's used to cover audit engagements, review engagements, assurance engagements, and even non-assurance engagements, we therefore are more generic in the terminology and the wording that we use. So other individuals would be individuals from a network firm and also individuals from a non-network firm or other service providers. If it's individuals from the firm, it would be within the first part, which is partners and staff performing the engagement. It excludes external experts, and we have a definition of external experts in our glossary. It also includes internal auditors who provide direct assistance on the engagement. So these exclusions are in the extent code. There's no change to that. In the case of an audit team, the audit team definition includes the engagement team involved in the audit engagement, and it also includes the next piece, Dinah, which is others who can directly influence the outcome of the audit engagement. And these others, these individuals, other individuals, are either within or engaged by the firm, or they could also be any other individuals within a network firm. And it excludes individuals who cannot directly influence the outcome of the audit engagement. So some examples of these individuals who can directly influence the outcome of the audit engagement would be those individuals who recommend the compensation of the engagement partner. It would include individuals who provide consultation on technical industry-specific issues, transactions, and events for the engagement. And these are individuals with accounting or auditing expertise. And the last would be individuals who perform engagement quality review or review consistent with the objective of an engagement quality review for the engagement. So this visualization hopefully makes it easier for users of the code to understand. And the task force proposal is that this visualization is not sitting within the code, but is in non-authoritative material. Going on then to the definition of audit team for the group audit. We had comments back from respondents that said that the term audit team for the group audit is a mouthful, and they suggested a more simplified terminology, which is group audit team. And the task force proposes to accept that revised terminology. So starting again with the engagement team, but in this case, the engagement team would be those who are involved in performing the group audit. And it also includes other individuals who perform procedures on the group audit. And those individuals could be from a network firm, from a non-network firm, or other service provider, or another service provider. And similarly, the external experts, internal auditors will not be included within that definition. So here, what you're seeing is the application of the engagement team definition in a group audit situation. The other part of it will then again include those that can directly influence the outcome of the group audit. So Diana, if you wouldn't mind moving forward. Thank you. So similar to audit team, others who can directly influence the outcome of the engagement here being the group audit, would be individuals within or engaged by the group auditor firm, any other individuals within a network firm, and also the last piece being any other individual within a component auditor firm outside the group auditor firm's network. So recognizing that in the case of a group audit, it's not just the firm, the group auditor firm, it's also component auditor firms that could be within the network or from outside the network. And the exclusion would be individuals who cannot directly influence the outcome of the group audit. So even if they can influence the outcome of the component audit, their inability to directly influence the outcome of the group audit will cause them to be excluded. So the task force believes that if the component, say, is being audited by, so if the component auditor firm is an SMP, and the SMP is auditing a small portion of the group audit, the likelihood of others from that component auditor firm that's not directly involved in carrying out the audit procedures, that they would not be able to influence directly the outcome of the group audit. So as a result, in terms of the compensation, consultation, engagement quality review, for the most part, it would still be individuals that are within the group auditor firm as opposed to those at the component auditor firm. But having said that, we have that last green box on the right, so that in the event that there is such a possibility that those individuals will also be caught within the definition. So with that, I would like to pause here, Galen, to take any comments or questions.
Any questions for Caroline?
And maybe Diana, if we can just go back to the one slide before. Sorry, forward. Thank you.
Caroline, I might ask, this sort of portrays a situation where a firm would belong to a network. I assume that firms can belong to more than one network. Does this contemplate any of that? Let's say that you had a group auditor and then you had a component auditor that belongs to a different network. Does this have tentacles that go all over the place, I guess is my question.
So yes, it does. So when we talk about, if we look at the engagement team, other individuals who perform procedures on the group audit, so you could have a component auditor firm that's outside the group auditor firm's network, so a different network, and that component auditor firm might not even be part of any network. It's just a standalone firm. But individuals from that firm who are involved in carrying out audit procedures would be caught within this definition, because ISO 600 revised doesn't differentiate between individuals who are performing work at the group level or at the component level. They treat them all as one and the same in terms of, that they are all members of the engagement team.
I don't, okay, so I see Hussein has raised his hand. Natasha, after that, we got 4 questions here. Hussein?
Actually, I want to raise one issue. Thank you for presentation. Here, it's imply engagement team and audit team definition in the item 5B. When I look at the agenda item 5B, there's a definition about engagement team, but there's no definition about on audit team. I think it should be useful to put in paragraph 14.8. Audit team includes the members just visualize in the presentation. I think it's useful. Thank you.
I would ask representatives if they could, maybe be quick with their remarks here. We've already gone past our time. Thank you. Natasha?
Hi, thanks. Yeah, just very quickly, just a question for clarification. I think you mentioned that individuals who may be influential in a component audit, but are considered not to be influential in the group audit would then be excluded. And I just wanted to know how you make the judgment call as to whether they're not influential in the group, if they are influential at the component level. And I guess it's those sorts of areas that can be important. Thanks.
Yeah. Thank you. Wei Ming?
Oh, thank you. A very quick comment on outside experts. I would like to suggest to strengthen the independence requirements for the outside experts. WFE pointed out in its reply to IESBA's strategy survey that consideration should be given as to whether the same ethical independence requirements should apply to outside experts. That's the accountancy profession may need to engage outside experts to perform advisory and assurance services related to sustainability reporting. I would like to note this.
That's all. Thank you.
Thank you. Akihito?
Thank you. Thank you very much, Caroline, for your helpful presentation. I have one general comment to be shared. I think that it needs to be kept in mind to ensure that sentences or provisions are not redundant or unclear. Clear language sentence is crucial, particularly for the future adoption of non-English speaking jurisdictions. That's my comment. Thank you.
Thank you. Conchita?
Thank you. Just 2 points. One, on the presentation of the survey or those who participated in the comment letters, you identified the groups, but there was no presentation on the places where they are, meaning are they from Asia, from Europe, and all that, just to probably present if it is really a global reach. I hope you understand.
Yes.
The other thing is related to what was earlier stated regarding influence, directly influence. Perhaps there should be more clarity. Okay, is it a significant role or whatever? Okay, because clarity is very important for purposes of better understanding, considering that not all are of the same language, although English is the business language that we are using. But I think it was cited earlier that some people may be challenged. Thank you.
Thank you. And Peter?
Thank you. With regard specifically to internal auditors, and forgive me if I'm coming into this a bit late, I agree with the position, but I'm not sure I understand the reasoning for arriving at this position, specifically because of the term direct assistance. I'm not sure the intention of direct as opposed to indirect. Surely internal audit, like any other staff member of the audit client, is a respondent, providing information or responding to questions. So I'd say that the independence of internal audit in the audited entity is a matter internal to that entity, and that internal audit responds to external audit needs in the same way as any other function in that audited entity. Or perhaps you're inferring to a situation where internal audit is sort of seconded or linked to external audit for the duration of the letter's mission. Thank you very much.
Thank you. So just thank you all for your comments. Hussein, we do have in the glossary the definition of audit team as well as the other definitions, but we'll discuss it at the task force level, whether we think that it's useful bringing in audit team into the front part of in 400. Thank you. Natasha and Conchita. Okay, I will come back to influence. Wei Ming, thank you very much for your comment that it is important that we look at the independence of external experts. Your comment is noted. Akito, thank you very much for your comment about the need for clear language. We will take note of that. We do have someone from JICPA who's seconded to IESBA working with us on the task force. So hopefully that will help us make sure that that what we put out is not just for native English speakers. Conchita, coming to your question about geographical coverage. So we had 12 global organizations. We had representations from Asia Pacific, Europe, Middle East and Africa, North America, South America. So that there was a global reach, and apologies for not putting up that that slide that shows you the coverage. And then going back to influence, others who can directly influence, and the need for clarity and what we mean by influencing the outcome of the group audit. So essentially what you see in the three green outlined boxes on the right side gives you an understanding of the types of roles or individuals that might the types of roles that might directly influence the outcome of the engagement. And then the question about if you have an individual who can influence the component, to what extent can that individual influence the outcome of the group audit? So it really depends on the facts and circumstances. If you're looking at a situation where maybe the group itself is essentially a shell investment holding company, and one of the component is a component that carries out all the operations of that group. In that instance, it might very well be that the individuals that can influence the component audit have the ability to also directly influence the outcome of the group audit. Alternatively, you might have another situation where a component is scoped in order to reach a certain coverage for purposes of the group audit. And so that component might not be able to directly influence, or individuals who, other than those who are directly involved in carrying out the audit procedures, other individuals might not be able to directly influence the outcome of the group audit. So hopefully that gives you an idea of the different situations. Galen, can I continue?
Yes, you may. Yeah, absolutely.
Okay. Thank you. So going on to independence in the context of a group audit. So on the next slide, we had comments relating to independence considerations for individuals. So remember, I mentioned that engagement team includes individuals who are involved in performing the audit procedures, as well as partners and staff who are involved in the work, and other individuals that can directly influence the outcome of the group audit. So here, in talking about the individuals, the members of the team, there's general support that independence considerations in a group audit should align with what is in ISA 600 revised, and that was also fed back to the IESBA board. There were suggestions for better calibrating the independence considerations for individuals involved in the group audit at the component auditor firm outside the group auditor firm's network. And so the next slide gives a bit more color on this. There were concerns about the proportionality of the approach that we were applying to individuals that were in component auditor firms outside the group auditor firm's network. There were concerns about negative impact on SMPs and potential market concentration. And there were also questions whether the additional cost and work effort in managing and monitoring the compliance of these individuals at the component level outweighs any uplift in audit quality. So the task force believes that we have to apply a proportionality approach. And therefore, we acknowledge that there's potential practical challenges for the component auditor firm outside the group auditor firm's network, because they have to implement a system to support compliance, to monitor that compliance by individuals. And that might detract the individuals and the firm from their investment in audit procedures, the audit procedures itself. It's burdensome to be monitoring these, and especially when the independence required is in relation to the wider audit client definition. So not just independence vis-a-vis the component audit client where the audit procedures are being carried out on, or even the group audit client that is that the component auditor firm is contributing its work towards, but other related entities. And so the task force did feel or did conclude that there was a need to recalibrate the extent of independence required. And so we concluded that applying the same independence requirements to all audit team members within and outside the group auditor firm's network would not be in the public interest, especially if we're looking at entities that are above the group audit client, or sister companies, sister entities. And therefore there was a need to focus on relationships with entities that are more likely to threaten the individual's independence. And so on the next slide, this is a depiction of the current proposal in the exposure draft. And so on the left, you see the situation where the group audit client is a listed PI, then the individual who's carrying out audit procedures on the purple entity, the component audit client, would have to be independent of all the entities that are colored red in addition to that purple entity. And here, when we look at, this is a fairly simplified structure, but in terms of controlled entities or significant entities and sister entities, there might be multiple entities in the structure. On the right, it depicts the situation where the group audit client is not a listed entity. And this would be our starting point, actually. So the task force is proposing using this right as the starting point and applying it to all situations. So it doesn't matter whether we're talking about individuals who are working on a component audit client, and that component audit client is part of a group audit client that is a listed PI, or not listed PI, or not even a PI, a non-PI. So on the next slide, the task force has 3 scenarios that it wants the board to consider and weigh in on. Option 1 on the rightmost is what we currently have in the exposure draft for non-listed PI and non-PIs, which means that the component audit client, the component auditor, the individual, has to be independent of the component audit client F, its controlled entities G and below, the group audit client A, as well as entities that are controlled by the group audit client. So control entity C, D, and all others. So entities that directly control the component audit client and entities that are controlled by the component audit client. In option 2, we are narrowing it down to only entities that are connected with the component audit client. So here you've got the component audit client F, it's controlled, and the entities it controls, which is G and others, the group audit client A, and control entity C, which has control over component audit client F. So there might be multiple layers of entities between F and C, but so long as they are connected all the way up to group audit client, that would be option 2. And option 3 would be where we only cover entities where the greatest threat to independence lies, which is the component audit client that the individual is carrying out work on, and its downstream controlled entities, because there's a possibility that even at component audit client level, there's a group or consolidation, and up to group audit client A, because the work that's being carried out by the individual is for purposes of the group audit or the report on the group audit client A. So these are the 3 scenarios that we're looking at. It doesn't mean that all the other entities drop off and there isn't a requirement to be independent. There's still a requirement to apply the reason to believe test vis-a-vis these other entities. So if the individual or the component auditor firm has reason to believe that the individual's independence is threatened because of a relationship with sister B, for example, then that needs to be taken into consideration as well, applying the conceptual framework. So this is what is being put up for discussion, and we would certainly appreciate your views and inputs on that. Before we take your views, if I can just quickly cover a few more slides, and then we'll pause to take your comments. So the next is in relation to the component auditor firm itself. If the component auditor firm is outside the group auditor firm's network. So there's general support to the proposed proportionate approach regarding independence considerations. And there were a substantial body of respondents who supported, including more application materials around the provision of non-assurance services by a component auditor firm outside the group auditor firm's network to the component audit client, and align it to revise section 600 on NAS. In terms of, there were comments also about the size and complexity and extent of work and applying that. But the task force did not propose to make any change because ISO 600 revised does not include the concept of significant component, and we do not think it's appropriate to reopen or revisit that. On the next slide, in terms of the non-network component auditor firm of a non-PI component, applying the PI independence provisions, where with respect to the component audit client, if the group audit client is a PI, we agree that there is a need to relook at the independence requirements. And in terms of where it's the PI related requirements, we believe that we should clearly state which PI related requirements would apply for a non-network component auditor firm. So the task force is proposing that in the case of a group audit for a non-network component auditor firm of a non-PI component, they should only comply with independence requirements applicable to the permissibility of non-assurance services, excluding the requirements around communication with those charged with governance. And they should also comply with key audit partner and partner rotation requirements. The next slide deals with communication. So there were comments around communication, and the task force acknowledges that there is a need to clarify on the communication building on what is in ISA 600. So there's a requirement to, there's a proposal to include a requirement for the group auditor firm to communicate the necessary information at the appropriate times to enable the component auditor firm to meet its responsibility under the under section 405 of the code. And this information includes the list of entities that the component auditor firm needs to be independent of. And the other way that communication is also required is that the component auditor firm needs to communicate any independence matters that require significant judgment and the component auditor firm's relevant conclusions vis-a-vis those judgments made. So there will be additional requirements on communication that works two ways. The next slide deals with the period during which independence is required. And so the general principle is that the component auditor firm should be independent during both the engagement period and the period covered by the group financial statements. However, if the engagement for the non-network component auditor firm is not of a recurring nature, and the component auditor firm's involvement has ended, then the group engagement partner might determine that an earlier end date to when independence is required is appropriate. So the determination needs to be made by the group engagement partner, and the group engagement partner might determine that date to be the later of the completion of the component auditor firm's work for purposes of the group audit, or when the group auditor firm notifies the component auditor firm that its involvement on the group audit has ended. So the later of either of these. So I've covered quite a bit, starting with independence as it applies to individuals, to independence as it applies to the component auditor firm outside the group auditor firm's network, to communication between the group auditor firm and the component auditor firm and the other way round, as well as the period during which independence is required of the component auditor firm outside the group auditor firm's network. So before I take your questions, I realized that I didn't respond to Peter's question about internal auditor. And so the point is really, Peter, that the definition of its engagement team, what we're saying is we're excluding these individuals from the definition of the engagement team. So they might provide some direct assistance, but the engagement team needs to take responsibility for their work. And so recognizing that, again, that external experts who's excluded from the definition of engagement team might have a part to play and might need to be independent. But because they're excluded from the definition of engagement team, we are not covering them or their independence requirements in this project. So with that, Galen, over to you.
Okay, so this is a chance for people to raise their hands and weigh in on what has been presented, recognizing that this is a difficult area. It's a very difficult area. Thank you very much for the presentation, Carolyn.
And Dinah, maybe if we can go back to slide 15, where we've got the 3 options, and we'll start with that. Thank you.
I see Hilda has her. Hilda.
Yes, thank you very much. And thank you for your presentation, Caroline. Indeed, not a straightforward subject matter, with a lot of details which are actually quite important to get through the matter. On the slide that you have, I think you explained very well the challenges that are related to this and how the task force, I think, has considered where they were and what other options there would be. I think you refer to, it otherwise being too burdensome. I think for the proposals that were originally made, it's also a matter of access to be able to do this, or to have all those independence requirements. And so when we consider that, I think the preferred option from the task force is option 3, and I think we would agree to have option 3 taken forward based on, the reasons that you gave, and the access needed, the consistency and the proportionality you would like to have in how the independence threat is taken forward here. I think it is a bit similar as to what your approach is on slide 17. It's not on, but I think you also have reconsidered based on the comments that you got as far as independence considerations for component auditors. Yeah,
yes.
And I think the task force is also making some revised proposals there. And so when we consider that, we also believe that the proposals that the task force is making now actually make sense, and we would support them to be taken forward. On all the other matters, we're very happy with how this is evolving. And so thank you very much for taking this forward.
Thank you. Dawn?
Thank you. I think my comments are along the lines of what Hildy has just communicated, although I have to say these last few slides really made my head hurt. So our concern was that the net was being widened and would impact on SMPs. So where you had an SMP that wasn't part of the group auditors network, and they performed a required statutory audit for a group company that wasn't a PI, and they might also act as a component auditor for group audits involving procedures on the financial information, that they would have to require to the independence requirements applicable to a PI. And so our view was, unless they were performing significant audit procedures, then that shouldn't be the case. But if I understand correctly, if you go with option 3, that would address our concerns. I just wondered if you could confirm if my understanding is correct.
Yes, that's right.
Okay, thank you.
Okay.
Hyson?
Yeah. Thank you, Caroline, for presentation. Of course, this is not only complex, but also complicated issue, and we do understand this. When it comes to our concerns, I think they have been addressed, because it was previously the tendency of avoiding the component orders from outside the network firms, but this is, I think, addressed to somehow, and it will be considered. It's quite true that the independence issue is an issue that has to be addressed from the quality management standards, because if they are from the non-network firms, it will be considered as kind of service provider, these firms, and from that point of view, additional independence requirements has to be taken into consideration. So we think that option 3 is that option that is just meeting the expectation in case of SMPs when they may be involved as component auditors. Thank you.
Thank you.
You know, Carolyn, I feel like I need to probably weigh in on this. I understand that there's a lot of support for option 3, and that's where the task force has come out with their recommendation. Is that correct? But the current version is option 1, and that's more in line with what I'm familiar with PIs, or not really PIs, but issuers in the SEC context in the US with their affiliates. So I feel like I have to support option 1.
Actually, Galen, in the case of a listed PI, it's, you know, every entity that you see on the tree is caught, and the challenge is really that, you know, if you are auditing that component down below, you as Hildy mentioned, you don't have access to information about which entities you have to be independent of, and that's why we felt that communication between the group auditor firm informing the component auditor firm which entities they have to be independent of is important. But even then, in a large group scenario, you could actually have changes that happen on a regular basis, so that communication after a certain point in time, it gets to be burdensome. And the restriction requires monitoring and communicating to the individuals. So it's not just the firm that needs to receive this information, but the firm needs to then communicate to the individuals, and those individuals have to, you know, if you're thinking about family relationships, for example, you know, how extensive would you have to go, and to the extent that if you don't know where your family members are, who they're employed with, how would that impact your independence? So it's the difference is between effectively going out and finding that information in order to then make the determination of whether or not you're independent, versus, you know, narrowing it down to, if you know, then you definitely have to apply the conceptual framework and be independent and assess the independence. But if you don't know, how can it affect your independence?
So you're saying that the distinction between PI and non-PI is really great, and it has to do with knowledge, access to information. And I can certainly I can certainly buy into that. Just looking at this slide though, option 3, you've got it labeled as where the greatest threat to independence lies.
Yes.
And that sort of bothers me a little bit, that we're maybe endorsing a scenario where the greatest threat to independence lies.
Right. In the sense that the entity where audit procedures are carried out is component F and its downstream entities, so G, and it's going to be used for purposes of reporting up to A. So that's the direct impact. But if I were to look at option 2 as well, there could be the control entity C could have an impact on the component audit client F. So any relationship that an individual who's auditing the component F has with component C, that relationship could also have an impact on the audit, because of it could be that division is a certain line of business. So there is,
I guess
consideration.
I could weigh in on option 3 as being preferable for non-pi. I think in a pi situation, I'm back where you are. That's really a different graph, I guess.
Right. But would it be non-pi, or would the distinction be pi versus non-pi, or listed versus?
Right. Yes, I agree. Yeah. Yeah, there's a distinction if it's listed and it has information that's available. That's the distinction, it sounds like. Yeah. Do we have other hands raised? I see.
Yes,
I'm doing all the talking here. Harrison.
Okay, I just had to unmute myself, but thank you for the presentation. And perhaps, I guess the question I have, or the issue that sort of bothers or concerns me, is that with the group audit, and there seems to be, as I read this, that there can be a lesser independence requirements for the component auditor, and where the group auditor should be making a decision as to whether or not they're going to rely on a component auditor's work. And it seems to me, if the group auditor were to do everything, including the component audit with all their folks, that all the people involved in the audit would be held to a higher independence requirement. But if I choose to use the work of a component auditor, so for that part of the work, I'm now having individuals that I'm going to rely on, and they will have a lesser standard for independence. And I'm trying to reconcile that in my head, whether or not that's a good idea to do that. And because there's other things to consider, is their connection with, what are the services that component auditor or the individuals, the firm and the individuals, provide to the group audit or the top parent, or to any of the other entities within that holding company structure. So that concerns me, that we're talking about a lesser independence requirements just because it's a component auditor versus the group auditor.
Okay, I understand where you're coming from, Harrison. So first of all is access to information. So if you are at the group audit client, if you audit group audit client A, and you're also involved in auditing, C and F and G, you would have access to information about the entire group or a larger extent. But if you are just auditing that component audit client F, you have limited access to information because it's not always possible or visible to you what's happening above the entity that you're auditing. So the access to information is limited. The other point is that if you are auditing the group audit client A, then, and if you are providing services to control entity C, there's a possibility that there could be a self-review threat there, because the work that you do at C could flow up into the group. But if you are carrying out your audit procedures at the component audit client F, if you were providing non-assurance services to control entity C, that might not have an impact on your independence vis-a-vis the entity that you're auditing, which is F. So the self-review threat might not be present, more so if it is controlled entity D, which is, in no way, it's within the same group, but not connected directly to the entity that you are auditing. Unless maybe controlled entity D has related party transactions with the component that you're auditing, then there could be, the threat to independence could be higher in that instance. So it goes to the fact that when you are down the chain, you actually have limited access to information. If you're within the same network, you would have access to that information. But if you're from a different network or you're an SMP, it does require the group auditor firm to provide you with that information in order to enable the component auditor firm to be independent.
Yeah, thank you for that response. I'm still not sure that I would be in full agreement with that, because for reasons I stated before, so I don't want to belabor the point, because I know we have limited time available. So that's my overall concern,
right,
is that we're having lesser or standards for independence for a part of the, what I would consider to be the engagement team or the audit team in general.
Yeah, understand. And our starting point following ISO 600 is that all engagement team members are the same and should be treated the same. So that's why in the exposure draft we had a different position, but taking into consideration the feedback, we are going to discuss at the board the three options. So thank you. Natasha, I see your hand is up.
Yes, thank you. And I think these exchanges have been extremely helpful for just elucidating the issue, because I too have got a slightly aching head. But I have to say, I would echo Harrison's and Galen's sort of unease, because, and I guess I'm most interested in the PIEs and the listed entities, clearly from the investor perspective. But I just think the logic here is not totally sewn up, if you like. I mean, I do agree with Harrison that you can't apply one set of standards to one and something else to the component. That just doesn't feel logical, because the point of principle is not, I think, one of access to information. I think the point of principle is whether that component auditor could be influenced by, and therefore not be independent, and therefore not conduct the audit with the level of rigor that would be required. So they may not have the information, but if they are friendly with, or have some kind of commercial relationship with, or doing some work with these other entities within the group, pressure can be applied to them, right? And I think that's the point. They may not even realize this, but I think that's the point. And I don't think the logic that you've outlined, which is, you know, around access to information, really covers that. So that would just be my observation.
Thank you. Ken, you want to?
Yeah, thank you, Caroline. Maybe I just want to provide a bit of additional context. And really what the task force is putting forward is a number of options to try to deal with this issue of proportionality, because when we're looking at the component audit down under, it is really a matter of what one would expect in terms of the systems for monitoring independence throughout the group. And what we've heard from respondents to the exposure draft is precisely that concern that it might be unduly burdensome and not proportionate in carrying out an audit at the component auditor level, in having to basically put in place and implement all these systems of monitoring to make sure that every individual at the component level is able to comply with all the requirements. That said, we are dealing with basically what is on the table here is a consideration of what should be required or prohibited in terms of independence. The proposals do include a provision that basically rests on a reason to believe test, and essentially it's an application of the conceptual framework. So even though there might not be specific requirements that extend across the group, like in option 3, for example, there would still be a requirement at the component level to have regard to circumstances, facts and circumstances that might give reason to believe there might be threats that need to be addressed at that level. I just want to make sure that that context is understood. But as Caroline says, these options will be considered at the board, and clearly the feedback from this discussion will help inform the board discussion also. Thank you.
Thanks, Ken. Jim?
Thank you. And I think my point is, and perhaps it helped what Ken said, but is just the relative complexity here. I mean, these are complex relationships. So I don't know, there's always a simplified response, but on the one hand, on the other hand, I think you need to potentially address the issue of complexity here.
Okay.
Would you like to respond, Carolyn, to those comments before we go to Dave and PIOB feedback?
Thanks, Galen. So I appreciate, Natasha, your point that the principle is whether the auditor could be influenced by other relationships or interests involving the other entities, and whether pressure could be applied on them in terms of intimidation threat and other threats. But as Ken said, I think we are looking to balance between the threat to independence versus just the scale and complexity of putting in place systems to enable the compliance with the independence rules. And I think Jim is spot on in saying that this maybe what we're trying to propose is a simple situation, but it might not necessarily fit every scenario, because there is a need to address this issue of complexity. So thanks very much for the comments. I think it is useful for the board.
Can I just one really quick additional thought to yes. Ken's point, the feedback you got, but the feedback you got was overwhelmingly from practitioners, as far as I could tell. So I'm not surprised you had that feedback. And so just to underline that point.
Yeah, that's understood clearly, Natasha. I think the concern really is the practicality of extending the requirements across the entire group for the component audit, or at least individuals at that level. And really, what the task force considered is if you were to take some of the largest audits, for example, you could literally have hundreds and hundreds of components, not just in one jurisdiction, but across the entire world. And the complexity comes in having, if you were to take an SMP, basically asking them to put in place the systems for monitoring compliance across literally those hundreds of components. And if you were to look at the diagram in option 1, you have controlled D1, D2, you could go on to D100, D200. There are literally hundreds, potentially hundreds of those controlled entities in a large group across a multinational company. And that is a complexity we're trying to balance and trying to achieve that balance.
Hussein?
Thank you. Just I want to raise one issue. For the group audit of public interest entity, I think both group audit team and component audit firm, whether it's outside the group audit firm network or inside, it doesn't matter, should be subject to same independence requirement, especially as all know, letterbox companies, holding companies, component audit of component is very crucial for group audit. Therefore, you should reconsider these issues for PI. I think it's important for both group audit team and component audit team. It's whether inside the network or outside the network should subject the similar. If you allow some exemption, I think it may create some treat, for example, self-interest treat, self-review treat. Thank you.
Thank you.
Carolyn, did you want to respond to those two comments, and then we do need to go to Dave?
Yeah, I mean, Hussein, I note your point, and we'll take that into consideration. Thank you.
Dave, we're anxious to hear what you have to say on this.
Great, thanks, Galen. Hopefully you can hear me okay.
Yes.
So first of all, Caroline, thanks for your presentation, for summarizing the feedback. My comments are about the issue that we've really focused on here, which is this slide. And I think we want to be, well, first of all, let me just say, I think we can all agree that the concept of independence is fundamental to the performance of an effective audit. And while a cost-benefit discussion is meaningful, it's also so difficult to measure that you can say something is complex or burdensome or costly, but if somehow we impair independence, that cost is going to seem minuscule with respect to the consequences that might arise. So I think as the board moves forward on this, you need to be very careful in how you consider these things. To your point, Ken, certainly there could be hundreds of organizations, although I suspect that most of those would be enlisted PIs, and I might expand that to PIs because some PIs are much larger than listed PIs in certain jurisdictions around the world, and again, that independence is so important. I think there's a real burden on behalf of the group auditor, and certainly in my experience, it's been in concert with management to make sure that the entire engagement team is aware of the entity around the world. but that the group auditor should be the one communicating, should be tracking this. And therefore, I think documentation of this is really important, because I don't think we want anyone on the engagement team to feel they don't have to be independent, quote unquote. Maybe how we apply it and how we think about it might be applied differently, but I think it's really important that concept of independence be drilled into every auditor at every component in performing the audit. And then lastly, just with respect to the end of the engagement period for the component auditor, I'm not sure what the problem is that we're trying to fix with respect to that. If a component auditor is doing work from year to year, whether the engagement period has ended, quote unquote, the following year has already started and you're within the engagement period, and so independence is still required. So I would be careful in making that an issue without being sure that we're solving a real problem before we draw some different conclusions. And then finally, with respect to that, often in my experience, again, the component auditor has a responsibility to continue to update their work up to the issuance date for the benefit of the group auditor to make sure there aren't any changes. So that would certainly impact their assessment on that. Thanks for that.
Thank you. Bob, do you want to?
Yeah, Barb.
Raise your hand?
Yeah, no, thank you. Maybe just for the team's consideration, we did our rulemaking on other auditors back in June, and understand that the PCAOB operates in a much different space than you all do. There are some statistics and numbers about, how many engagement teams are usually involved, at least in our space. I think the largest engagement has 67 other auditors or likely other firms, but more of the average is more, I think, around between 5 and 10, but all of that information is there. Under our rulemaking, the lead auditor has to obtain and review a written affirmation regarding the other auditor's policies and procedures regarding independence. They have to ascertain that the other auditor understands the independence requirements. And again, fully acknowledging that it already would be required. It's not a new requirement we added, but there were no comments that I recall about the cost of doing so. So you might just find some interesting statistical information and data in the rulemaking.
Thanks, Bob. And we'll certainly look at PCAOB's rulemaking for that information. And then going back to Dave's comments, I agree with you that it's always with hindsight that when something goes wrong and you look at the impact of the cost, then it would lead you to question why in the first place you didn't make that investment in a system or a process in order to prevent that issue from arising. So we do recognize that it is important for the group auditor firm to be communicating that information, and that's why we're also proposing additional requirements around communication, because even if it is whether it's option 1, 2, or 3, there is that need for the component auditor firm to be receiving information about the group structure on a timely basis so that independence can be achieved. As for the end of the engagement period, if in more often than not, or the norm is that the component auditor firm would be engaged to continue to do the work year after year, because the component would be scoped in. What we were envisaging in response to certain comments was a situation where that component auditor firm is just required to carry out a certain specific audit procedure on a one-off basis. And as a result, there isn't even a need for an update of the report on its work done. So it's more an exception in a limited few situations, but giving that flexibility for the group audit engagement partner to make that decision. Thank you. Natasha, you've got your hand up.
I do, but I'm also very conscious that we're overrunning. I mean, it was just, I thought we were going to have a sort of additional conversation about that period over which they needed to be independent. And I was simply going to say that I agree with Dave's comments on that period. I think it's important, but I would go a bit further to say you'd expect, I think, that it wouldn't be a cutoff just after that period through that they're auditing, that there would be a longer time period in that, clearly if somebody's independent on the date that they finish that work and then is not independent the next week, there's a potential impact on the independence in which they're conducting that work if they know that that's going to be the case. But maybe that's something we could pick up later.
Yeah, thank you. And that's why we have the later of when they complete or when the group auditor firm notifies them that they are clear in terms of independence. So Galen, recognizing that we've gone past time, just very briefly, just to say that in the case of breach at a component auditor firm, we did receive feedback that there should be similarity in terms of how it's handled, whether it's a component auditor firm in the group auditor firm's network or outside. And therefore, we've made changes in order to align the two, but recognizing that in the case of the component auditor firm, the breach is related. The question is whether or not the group auditor firm would be able to use the work of the component auditor firm versus in the case of other breaches, it's about within the network, it's about the policies and procedures of the network. So
Carolyn, I have to probably say at this point, we probably need to get a pretty quick wrap up. I don't know if there was a few other things, but Brian in the next section is going to get shorted on their time if we don't finish up. Thank you.
Yeah. So Diana, if you go forward. Yeah. So this was what I mentioned in terms of breach, and next step would be the board meeting. We would have outreach activities in October and November, and as mentioned earlier, we intend to have the second read and approval in December. So thanks very much for all your comments and feedback, especially on the three options. It's really useful, and we'll certainly take it to the board. Thanks, Galen.
Thanks a lot. And with that, we'll then go on to Brian's presentation. Brian Friedrich is going to give us the technology working group's final report on their fact-finding activities. So Brian, you have the floor at this point, and we're sorry that we're starting a bit late.
No worries. We'll just have a little bit of overtime. Thanks, and thanks for the slides there as well. And good day, everyone. Okay, we can probably move to the next slide, please. Great. So for today's brief session, I'm cognizant that the CAG has not seen our working group in about a year, and that we're now at the point where we've drafted our final phase 2 report. So I'll start with a brief recap of the IESBA's tech initiative overall, how the pieces fit together, and the process that our working group has followed, particularly for those members who are newer to the CAG. Then I'll spend the bulk of our time providing an overview of the insights and the recommendations that have arisen out of our outreach and fact-finding, which included the involvement of the tech experts group that was convened a few months ago. And then finally, I'll speak just a little about the next steps before releasing our report later this year and what we're suggesting the IESBA consider for technology and the working group in 2023. Also going to propose that we, slide issues. Anyway, I'm also going to propose that we wait until the end for questions and comments. So if you can please make a note of them as we go through. All right, next slide. Okay, so the overall tech initiative began back in 2018 with the first iteration of the working group focusing on understanding the impact of AI and big data. Following that group's activities, the phase 1 report was issued. That contained 7 categories of recommendations related to code change considerations, in addition to some suggested topics for non-authoritative resources. And at that point, the board struck a task force to continue the work overall, prioritizing the potential code implications, but also with the mandate to produce non-authoritative materials and continue fact-finding on the technologies not yet evaluated. Turned out that that was a bit heavy for a single team. And so earlier this year, when additional resources became available, last year, the board decided to bifurcate the task force and create a parallel working group phase 2 component. And then that split meant the reconstituted task force, as you're aware, they continued working on the code change drafting, and obviously they're currently in the process of evaluating review comments from the exposure draft, whereas the working group moved ahead with the non-authoritative guidance as well as the remaining fact-finding, which was evaluated and documented, and that's what's now in our draft phase 2 report, which is obviously included in your package. Okay, next slide. So in summary, our working group has 2 objectives. The first is developing or facilitating the development of non-authoritative content. That shows up as the various products that hopefully you've seen being published over the past year or so, as well as some that are still forthcoming. To that end, you'll find a listing of these materials, including some links in Appendix 3 of this slide deck. Second objective, largely unchanged from phase 1, other than that we took on a new breadth of technology being researched. That's to identify and assess the potential impact of technology on the behavior of PAs and how that fits with the code. So in other words, making recommendations around additional code changes if needed, or the production of non-authoritative materials where that makes sense. Next slide. Okay, so in terms of our process, starting with the inputs in the top grouping there, we've obviously conducted a significant amount of fact-finding through both targeted research as well as desk research, so things like academic and other journals and so on. Our work has also been informed by coordinating with the IEESB. We've got a correspondent member, also meetings with the IFAC education panel. And then more recently, we've been benefiting from that technology experts group, where we've got 8 individuals from a variety of technology fields and different jurisdictions, folks who really have their finger on the pulse of where technology is and where it's likely to be headed, and then what that means in terms of both opportunities and threats for PAs. So far, they've been extremely valuable as a resource that deepens the expertise that's available to both the working group and to the board more generally. And Appendix 2 of this deck will give you a bit more detail about that group. And then in the cloud in the middle, we've taken all the various inputs and have used them to compile a number of important insights, which are considered in the context of the code, including the current tech ED wording. And then below the cloud, as I mentioned before, our 2 main objectives are contributions to a variety of non-authoritative works, as well as developing this phase 2 report. The dotted side arrow that you see there, that reflects that as we've worked our way through our evaluation, where there are insights relevant to the technology task force's current work, we've shared those for their consideration as well. Okay, next slide. So on this slide, we're really just depicting the range of technologies and related issues that we covered. The group of boxes on the left, so RPA, AI, and data governance, and so on, those were the primary areas of focus, areas that numerous stakeholders really wanted to talk about. And then the listing on the right are other areas that we considered at a higher level, some of which remain very nascent, such as quantum computing, but that at least we wanted to give some initial thoughts to. Okay, next slide. And then here's just a sampling of the breadth of stakeholders that we held discussions with, everything from tech companies, public sector entities, academics, firms, PAIBs, corporate governance orgs, PAOs, national standard setters, and so on. Full listing with some descriptive information can be found in Appendix 1 in our report. Just wanted to note that for each of these meetings, we took a lot of detailed notes, and then we went back and fact-checked those notes with the meeting participants to ensure that we got their perspectives correct. Then what we did is we took all of those various meeting notes in aggregate and identified over 500 ethics-related items, which we believed could use some further consideration, which then on the next slide, we then applied the following decision process to. In a nutshell, because the writing is quite small, although I know this is also documented in the report, but what we did is we considered whether the highlighted issue that was raised by stakeholder or the comment was something that rose to the level of being codified, and then we looked at whether it was sufficiently addressed already or whether we perceived that there might be a gap. Or alternatively, if the comment or issue related to an area for which non-authoritative materials would be more appropriate or sufficient for what the issue related to. And then one other option just in the bottom right here was left for those matters where the comment or the issue suggested neither a code change nor specific inclusion in non-authoritative work, maybe because it was something that was already addressed elsewhere, such as in the work on role and mindset. Next slide. Okay, so once we'd identified all those items that appeared to have at least the potential of impacting the code or the board's work more broadly, we classified these into key themes that supported the individual insights and eventually the recommendations. More detail about the key themes and the associated sub-themes is included in our report, but the summary of these as we presented them to the IESBA at its June meeting is included in this slide deck as Appendix 1, just for your convenience. Okay, and then next slide. Okay, and then just before I jump into the individual recommendations, it's important to be aware that our working group concluded that the code continues to be applicable and relevant with few exceptions to guide PA's ethical decision-making when they're involved with designing, implementing, or using disruptive and innovative technologies. We also observe increased consistency in the key themes that we're hearing from stakeholders and seeing in our other research. And it's sort of a confluence over the past 4 years of the items that are coming up. Also, although technology and the landscape continues to evolve relatively rapidly, it's not yet taken a revolutionary turn. Certainly that's the overall feeling from stakeholders with respect to the impact on PA roles or ethical decision-making. And not to say that it will not take that kind of a turn, but at this point, we're not there yet. And then finally, we believe that the proposed code revisions as laid out in the tech exposure draft will enhance the code's robustness and longevity, and that our recommendation should also be carefully considered with an eye to the future. Okay, next slide. Okay, so this is going to move us into the insights and recommendations area. And then, yep. The first recommendation came out of discussions regarding how the code applies to using actual client or customer data to train AI models, which benefit from quality data sets for the machine to learn more effectively and efficiently. So if, for example, a firm trains some of its AI-based audit or other tools on actual client data, that can certainly help improve its audit quality with an improved tool, which would be in the public interest. But arguably, it's also in the firm's interest for competitive and economic reasons. So the two impacts or potential impacts on the fundamental principles that we noted had to do first with the need for appropriate transparency in that kind of situation, so to ensure that the PA is acting with integrity, and then also the question of whether the use of that client data might be seen as using confidential information to the firm's advantage. And the same questions could come up, of course, from a corporate perspective in a PAIB capacity. So next slide. So the recommendation that flows from these insights are to consider clarifying the matter in the code in terms of whether such data can be used and the considerations for doing so. We're also suggesting that non-authoritative guidance be developed here to emphasize the expectations for complying with the fundamental principle of integrity when using client or customer data for AI training, highlighting the need for adequate transparency in order to obtain meaningful informed consent. Certainly a hot topic in a number of jurisdictions. With respect to potential code changes, we note that the Technology Task Force has already advanced this idea a bit by suggesting a revision to their prior exposure draft wording around confidentiality to build out expectations for PAs using anonymized confidential information with consent. And that's something that the board will begin considering next week. Next slide. Okay, our next recommendation relates to transparency and explainability. And the background here is a need for AI systems being used by PAs or where they're otherwise relying on those outputs to be sufficiently transparent and explainable with respect to their processing so that the PA maintains adequate oversight and can ensure reliance on such systems as appropriate. It's also necessary so that the PA can be appropriately transparent when they're discussing any potential limitations of using such technology with clients or with their employer. Not being able to do so can threaten the PA's compliance with numerous fundamental principles, as well as their obligation to act with sufficient expertise and to meet their public interest responsibilities more broadly. But there's a significant issue here that needs to be well understood by PAs and by others, in that there are many examples at this point of AI systems that are inherently unexplainable, particularly after a system has undergone iterations of deep learning. And what can happen then is that a PA can be more influenced by automation bias and rely on the system, thinking that it's being put together undoubtedly by very bright people who understand exactly what the system is doing, when that understanding might not actually exist after the system was developed. And this, of course, is even more of an issue when we're talking about high-risk decisions or high-risk systems that involve, for example, the potential for significant economic, social, or human impacts. Next slide. So we think that this needs to be looked at more closely with respect to both non-authoritative guidance and potential code changes to emphasize the importance of promoting the development of AI systems that are explainable and helping PAs to understand what's expected of them and how to meet those expectations, given that obviously PAs, most of them, are unlikely to become technology experts themselves. So this is not about a PA needing to be able to explain the system. It's about a system being explainable and having access to someone who can explain a system. And so again, here we note that the Tech Task Force is now suggesting that a lack of sufficient expertise or not having access to an expert with sufficient understanding be included as additional examples of threats to compliance with the fundamental principles in a couple of paragraphs in the code. Okay, next slide. And then moving on, the third recommendation relates to a persistent issue that's been around for a while, but it's still being raised. And that's the situation where a PA or a firm has custody of a client's data, not in the hosting sense, but rather just custody as possession of. This is becoming increasingly common in a wider range of contexts, and it's also becoming more of a focus for regulators and consumers alike. Although data is not typically recognized as an asset on the balance sheet, there is certainly consensus among stakeholders that data loss or misappropriation or misuse has significant consequences, whether reputational, financial, and or legal consequences. And so that raises issues of confidentiality and also potentially due care. So in the context of the code, section 350, custody of client assets, considers, of course, assets generally, but data is not contemplated in that section. But that's at the moment the kind of closest analog. Okay, next slide. So what we're recommending here is that consideration be given to revising the code to address the implications of PAs having custody of client or customer data, including considerations of the complexity of complying with the sometimes inconsistent legal requirements around privacy and recognizing the ever-increasing cybersecurity risks. Given the importance of data governance overall, stakeholders also see a real need for educational and support materials here to highlight the roles and expectations of PAs with respect to data governance more broadly. That's becoming more and more part of the PA's ambit. Next slide. Okay, recommendation D is very broad, high-level point about the need for PAs to be ethical leaders with respect to the decision-making processes that they support or drive. I know that we were very heartened to hear stakeholders say PAs need to be at the table, PAs need to be taking a stand, and that was not coming from, you know, just big firms or PAOs saying that. So we thought that was a good thing to have that confidence. So they raised a wide range of issues where they saw risks in organizational decision-making arising when ethics issues are not being adequately evaluated in the upfront design and planning. And if ethics is left as an afterthought, then the focus typically moves to where something can be done as opposed to where something should be done right from the get-go. And so stakeholder consensus was that PAs need to earn their place at the technology decision-making table to help guide these decisions better as ethical leaders, particularly with our knowledge around internal controls and appropriate safeguards, but that doing so requires PAs to develop enhanced professional competence so that they can ask the right questions and help determine appropriate guardrails. So next slide. Okay, on this topic, we note that the task force has now included text that says PAs are expected to exhibit ethical behavior in dealings with individuals with which the accountant, the firm, or the employing organization has professional or business relationship. So that's kind of modeling good behavior. In light of this, we think that it would be beneficial to also add additional non-authoritative guidance materials to help illustrate and support these broad expectations for PAs to both exhibit and champion ethical leadership in decision-making. We've also observed that this concept of ethical leadership extends to a number of areas, particularly those areas where there's a higher level of complexity, which would include areas of tax planning and related services there, as well as sustainability and so on. So we see synergies here with other IESBA work streams and an opportunity to provide guidance on demonstrating ethical leadership to meet public interest responsibilities and societal expectations more generally. Next slide. Okay, the next recommendation, this relates to the expectations for PAs to bring information about technology-related risks and exposures to the attention of those charged with governance. So whether that's board, audit committee, senior management, etc. Here, the concern raised by several stakeholders was that when a company or firm hires an external consultant to develop or implement a technology tool, there's a tendency to rely overly on that external provider rather than internalizing the overall accountability for the technology and its use. And one of the things that was illustrated by a stakeholder that can happen, actually a couple stakeholders, is that the external provider might finish their work that they've been contracted to do and then leave, but the PA and other staff haven't maintained responsibility and oversight sufficiently. And so there's then no ability for those who are making strategic decisions around resourcing and so on to get the information that they need as to the risks inherent in making use of that technology and in maintaining it. Next slide. Okay, so our recommendation here is to look at adding some additional material in both parts 2 and 3 in relation to the subsections that exist on communicating with those charged with governance to communicate relevant matters. In other words, matters that might impact compliance with the fundamental principles to those charged with governance in order to strengthen the concepts of accountability and transparency. And this recommendation would build on the revisions to the code that have been included in the Tech ED that require the PA to explain inherent limitations in the professional activities that they perform to users of the output of their activity. This could also extend beyond technology-related matters and include, for example, again, sustainability or tax planning issues that also reflect emerging risk areas that are keenly on stakeholders' mind, but just sort of upping the communication expectations, at least, with those charged with governance is the broad recommendation. Next slide. Okay, next issue relates to reliance on experts or the use of experts in the assurance context. There's a growing understanding that PAs need to work with and collaborate with multidisciplinary teams more than ever before in order to be able to particularly leverage transformational technologies. But in doing so, there's also a threat that the others being consulted or collaborated with might not be professionals that are required to uphold ethics standards. And if these other multidisciplinary team members don't uphold ethical behavior or don't really see that as being a core element, again, of working through the entire development and use process, that could threaten the compliance with the fundamental principles for the PA as well. And so it's important for PAs to be able to assess whether others on the team are acting in accordance with the expectations that are inherent in the fundamental principles so that they can respond to those situations appropriately. Okay, next slide. Okay, our recommendation here is largely to develop non-authoritative guidance, possibly to look at code revisions to emphasize that PAs are expected to assess the extent to which the expert being used and relied upon behaves in alignment with the code's fundamental principles and what factors that they ought to consider in doing so. On a side note here, there have also been some discussions by stakeholders and at the board table that there may be an opportunity to broaden the application of the code beyond just professional accountants. That's an issue that's obviously live and being explored as part of the process to develop the next strategic work plan. So this would be in alignment with that. Next slide. Okay, next issue is probably the one that we heard about from most stakeholders in terms of there being a belief that PAs are not yet prepared for the changes that are underway and that are already upon us in some cases. It was suggested that most PAs need significant upskilling in technology in order to be able to exercise due care, achieve competence expectations, to apply sufficient expertise, and generally, again, to meet their public interest obligations. The consensus among stakeholders was that PAs, although upskilling is needed, they don't need to be data scientists, but they do need to have sufficient understanding of the underlying technologies to be able to apply professional judgment, critical thinking, and skepticism to manage risks and take a meaningful role in strategy, design, and implementation discussions and decision-making. So this goes hand in hand, of course, with what I talked about before about earning the seat at the table as these different technological systems and so on are being developed that then lead into use and reliance by PAs. So getting in up front requires some of this work. Next slide. From a recommendation standpoint, though, we really think that the IESBA is not the best placed organization to specifically define what constitutes sufficient competence in these areas. In ongoing board discussions about the technology initiative, it was recognized that, of course, initial and continuing professional development falls under the IFAC statement of member obligations. And in that way, it's really the purview of the International Panel on Accountancy Education to define and then also the responsibility of PAOs to uphold in their memberships. But the IESBA does have valuable insights to contribute to these matters with respect to the ethics obligations of PAs. And so we're recommending that IESBA engage more actively with the IPAE and conceivably with PAOs to encourage and support their work in determining what represents sufficient competence in technology and how that can be achieved by PAs. Okay, next slide. All right, the next item is another one that we heard. We've heard this really consistently from, back in 2018, even around the pressures on PAs. This pressure issue has been expressed in a number of different ways by many different stakeholders, includes feeling pressure from information overload, a lack of time or other available resources, and more generally from the pace of technological, legal, regulatory, and other changes. Some stakeholders frame these pressures as PAs feeling intimidated, but not in the typical sense that's being described in the code now. The intimidation referred to here, so in this sense, can come from a sense of being legitimately overwhelmed by the technology, for instance, including simply not possessing the capacity to understand the technology or what it's doing, a lack of time to complete an activity in a quality way, or just the pace of change, rather than being based on pressure that's exerted by another individual. It can also threaten not just the PA's objectivity, but other fundamental principles as well, most notably professional competence and due care. Next slide. So the TWG believes that this is a matter that can be addressed in the code by, for example, recognizing this context in section 270 or elsewhere. So in other words, recognizing in the application material that pressure to breach the fundamental principles might arise from other than simply external sources, external individuals, so perhaps internal or environmental sources as well. We also think that it's worth looking more closely at the description of intimidation threat in that category in the conceptual framework, and the way that this threat particularly is illustrated throughout the code. Really what we see is that the threat category itself is well defined and fits what we're talking about. And the single example that's in there now, again, makes sense. But then as we work through the code, everything is focused on just external pressures from external individuals with respect to intimidation. So we also think that there's a role to play here for non-authoritative guidance, although we think once more that PAOs and other bodies are likely in the best position to lead this. Okay, next slide, please. Okay, 2 more to go. Next recommendation, this relates to stakeholders' observations that there's a rise in strategic and commercial relationships between accounting firms and technology and other companies. Given that adding the firm's name to a project or a product or a service can implicitly drive consumer trust, there's recognition for there to be care taken to ensure sufficient transparency and also ensure that independence considerations are adequately considered and addressed in these situations. Okay, so next slide. So here we're recommending that these newer types of relationships, certainly that are being very actively marketed, be looked at, be evaluated, and that also section 520 around business relationships be revised to more comprehensively address potential threats to fundamental principles in these cases. And then also where relevant, independence considerations as a result of broader business relationships that are currently not contemplated in the code should be examined. The Tech Task Force is proposing as examples in section 520 in relation to close business relationships. So there's been some aspects added there. And this broader issue is also being currently asked, right, as part of the upcoming strategic work plan. So there was some feedback that came in, of course, from stakeholders on business relationships and sort of how that could be prioritized as well. So again, this recommendation is definitely a stay tuned one. Okay, and then next slide. So finally, our last recommendation relates to the importance of the IESBA continuing to raise awareness of the code and its importance. This one has broader implications pertaining not only to the board, but also to its stakeholders in the broader ecosystem, including regulators, other standard setters, as well as PAOs, firms, and academics. The background here is that during our research and outreach in particular, we noted that numerous stakeholders were less versed than we might imagine in the requirements of the code or really of a PA's public interest responsibility, even at a high level. We're certainly not expecting a lot of, especially external stakeholders, to have a deep knowledge of the code, but the knowledge was quite limited in a lot of cases, which really influenced our discussions. On a different but related note, various stakeholders also shared with us the need for more education and guidance materials around technology, particularly those of an applied rather than a theoretical nature. So not just connections of the code to some topic, but really looking for various tools and applied content that PAs can make use of in their day-to-day environments. So that's something that we've got there as well. Okay, next slide. So our recommendation here is that the IESBA continue its ongoing work around general outreach and advocacy to highlight the relevance of the code and the high-level aspects of its content, as well as continuing to play a role in developing, facilitating, or otherwise contributing to non-authoritative resources and materials related to that confluence of technology and ethics, and for specific topic areas that we've determined to be of most value. Again, these just came out of the discussions with stakeholders. The ones that they find valuable, you'll find in Appendix 2 in the report. Okay, so that wraps up the recommendation. So next slide, please. And then for the final brief section, I'm just going to share with you our working group suggestions for 2023, other than what the task force is up to, which obviously is governed by its own mandate and timeline. Okay, and we've got pillar 1 there. Okay, so our first suggestion is to make available regular education for the board on emerging issues, obviously technology, but also other important matters such as sustainability. Given the extent to which we heard really from every stakeholder the need for cross-profession upskilling, it seems reasonable to include the board in such activities as well. Here we believe that the relevant work streams in different technical areas are probably the best place to recommend topics, timing, and relevant speakers for the board. Next slide. And then for pillar 2, we believe that the broad activities of the technology working group should be continued for at least the coming year, but that its expected activity be considerably slimmed down. So given the intensive resources that were applied to this area over the past 4 years, and probably more importantly, that we've been finding the themes and issues raised, as I mentioned, to be growing increasingly consistent, regardless of the stakeholder or the geography or even the technology area, it seems appropriate at this point to have a bit of a scale back. But with innovation continuing at a strong clip, regardless, we shouldn't take our eyes off the ball completely. So our thought is perhaps a reduced working group complement and engaging with the tech experts group as well, and then reporting back to the board twice a year in 2023 for environmental updates.
Brian, let me just pause you for a second. So we've come to the end of our period, but we want to hear the rest of what you have to say and provide some feedback to you. So I'd ask, to the extent they can, representatives to stay on. We also want to hear some final wrap-up comments from Dave and Gabriella. But if we could try to move it along quickly, that'd be appreciated. Thank you, Brian.
Yep, thanks, Galen. I've got 3 slides left. So, okay, so on pillar 3, as part of maintaining the tech working group through 2023, this group would be available for ad hoc analysis of tech-related issues that other IESBA work streams encounter, and also be able to offer thoughts on any potential code implications from a tech perspective. And then next slide. So lastly, because the TWG is obviously well-versed in the key themes, the insights, and the recommendations arising from the initiative's finding, that group would make sense to engage with other IESBA work streams and also external stakeholders to both facilitate the consideration of the working group's phase 2 findings, and then with support from the tech experts group to contribute to developing and or reviewing non-authoritative materials that are being produced. Okay, last slide. Okay, so that obviously that wraps up the highlights of our draft report. The next steps in the development are to consider any feedback that's received both from yourselves and from the board before finalizing the content. Before sending the report off to the design team at IFAC, who will work their magic in producing a publication quality PDF release. We're also in initial discussions with IFAC about the potential for an interactive web version of the report, given its considerable length and different users consuming content in different ways. And then along the same lines, we're looking at other options for rolling out the content in smaller, more digestible pieces. especially the very lengthy part 2 key themes observed that I didn't even have a chance to cover in today's talk. We believe that this could more effectively leverage our findings to a much wider audience, including PAOs and even individual PAs, who will then get a better sense of where these technologies are at and what some of the implications for their rules are. All right, next slide is a placeholder slide. So happy to take questions or final comments. Certainly don't be shy about dropping us a note. Excuse me. My voice quits right at the end. It's perfect timing. About dropping us a note after the meeting if something else occurs to you. Thanks, Galen, and everyone.
I don't see any hands up at the moment, Brian. We put you under a lot of pressure to get through a lot of information. It is an extensive report. It has a lot of great stuff in there. Thank you. But again, I don't see any hands up. Extremely critical area. I will reach out to Dave. Dave, did you have any comments on the conduct of our meeting today that you'd like to share with us?
So just getting off of mute there. Well, Brian, thanks for that report on technology. It's an excellent presentation, and I know over time, as those recommendations get implemented, but not only by IESBA, but other bodies responsible, that it'll be valuable to PAs and to the public interest. So thank you for taking us through that. A couple of things I just wanted to say about tax planning, Galen, if that's okay. Sure. Jens, first of all, thanks for a great presentation. You and the team have made incredible progress in such a short period of time on a difficult, complex topic, as you heard from all of the feedback. So thank you for doing that. Just a couple of things I'd highlight. First of all, clearly the exercise of professional judgment is really important in the application of the guidance that you described. And I think emphasizing that in as much as possible will be really important. Another concept, you mentioned it, but I just want to reiterate it and reinforce it, is transparency. First with management, as the PA is advising management on these matters, but also with taxing authorities, again, balanced with confidentiality, but to the extent that that's important, I think transparency is important. Transparency is different from advocacy, I understand. And so I think, that responsibility for the PA adds to the public interest protection of the PA. With respect to documentation, if I read the document correctly, it says that we would encourage but not require documentation with respect to these matters. And I just ask you to reconsider that, because without documentation, I don't know that we have evidence that things were considered. And I just find documentation to be a key step, not only in audit procedures, but also in applying the aspects of the independence and ethics requirements. And then finally, as you're drafting the exposure draft, I'd encourage you, to the extent that it's possible, to get feedback from tax regulators and other regulators to make sure that this is consistent with their expectations of the profession and the profession's responsibility in the public interest. So with that, Galen, I'll hand it back to you.
Thank you, Dave. And Gabriella.
Thank you very much, Galen. Of course, I will not comment specifically on any of the presentations and comments that have been made. Just wanted to thank you all for the extremely helpful comments and suggestions made in this meeting that will help me above all in a few days. Leading with the discussion at the board, it's exactly the objective of this meeting, and it's very helpful and very inspiring to listen to you and to understand before the meeting what your views are on the various topics that we will be discussing. We will have an extremely demanding, very exciting agenda next week. As we can see from this discussion, not easy topics, complex projects, complex topics, and a lot of thoughts and different opinions, which is good. But it will inform our discussion, and it's clear that what will come out from that discussion will be better by having been previously informed by what your positions and your opinions are. So thank you very much for your thorough consideration of what is being proposed, and for the insightful comments and suggestions shared during this meeting. Galen, thank you also for leading the meeting. We will hope that after the next week we will have important developments and progresses to communicate, which will of course profit from this discussion. Thank you very much.
Thank you, Gabriella. And so that'll bring our meeting to a close, and our day 2 will be on September 23rd. Looking forward to that. We'll have continuation and more presentations at that point. So thank you all for your contributions today. Bye.
Thank you. Bye-bye. Thank you all.